Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Monday, December 29th. Thank you, everybody, for being here. We have 3 market opens left of 2025, which is crazy to think about, but it is happening. We have today, tomorrow, and Wednesday, and we're done. Then we are done. On Thursday, we will be officially entering 2026. We've got 3 days left of the year to see how these portfolios turn out, how all of these stocks end out at the end of the year. S&P 500, can we get to that 7,000? Bitcoin, can we get to at least 90,000? Silver, gold, which we will talk about a lot today. How do those end out the year? And we've got 3 final days to see what the ramifications are and what the frameworks are going to be to set up the foundation for 2026. So very excited to be here. Thank you all for being here. Hopefully everyone had a really great holiday weekend. We were live last night for the Future Show. We went long, about 4 hours, talked about a lot of stuff. And so today we're actually going to get some volume as the market opens in the next probably, 40 minutes. Last night there wasn't a lot of volume for the futures. So there you had a lot of wonky action happening in the futures overnight markets. And you're kind of seeing that similar trend continue into the pre-markets. A lot of stuff that was green flipped red. A lot of stuff that was red is flipping green. Bitcoin right here is down in the pre-markets. NVDA is down 1.3%. That has lost 190. Bitcoin, when I left last night, was at 90,000. Got a pretty ugly candle of $3,000 right back down to 87, which once again, Bitcoin has been playing with a lot of people in terms of, how it's been giving the idea that it's making a run and then it doesn't make a run. So you got Bitcoin that's down. We'll talk about some of the implications of that. And then silver, which I think is, I think this is really the story of the day. We'll talk a lot about it. We spent a lot of time talking about it last night, but folks, 7.5% down. We're talking about what was yesterday night for a brief period larger than NVIDIA in asset price or in asset size, given it got to $86 last night, going down 15% in an intra-swing over the past 24 hours. Now down 7% from the price that it was earlier this morning. 73.23 on silver. It was 86 last night. Gold is also down 2.5%. So you're seeing the commodities basically get hit 2 to 3% across the board. Copper is down. Palladium is down 9%. Platinum is down. And nicely silver down 7.6%. They're acting like meme coins. I mean, silver should not be moving up 7%, down 7%, but that's what's happening, which is pretty crazy. So a lot of implications of what's going on in the pre-markets. We'll talk about what it means as we get into the end of the year for 2025. And then we have a bunch of other macro headlines that we've got going on. Again, last week, especially on Friday, there really wasn't a lot of volume. So whatever little bit of momentum that we had, S&P 500 ended flat. NVIDIA did get back to that 192 level, then got hit at 190. I think today, that given the bond market is open, the stock market is open, the bond market will be closed on New Year's Eve, even though the stock market will be open. We'll at least get a little bit of a better sense if the volume does come in today, which I expect it to do, of how the market is thinking of this end of year. And if we do get this Santa Claus rally, which, I mean, it's supposed to start on December 26th. Today is December 29th. You didn't really get that momentum on December 26th, so maybe it happens today. Maybe this pre-market is a little bit of a fake out, but nonetheless, we are going to find out in the next 40 minutes, and then we will keep going from there. So let's get into it. Good morning, good morning, good morning. Thank you, everybody, for being here. I got Ethereum from Hood last night. So I thought I was special because everyone got their prize from the Hood giveaway and I didn't. So my theory was like, oh, if I'm having to wait longer than other people, then I'm going to get something special. And no, I ended up getting $2.50 of Ethereum. So if you got something cool, let me know in the chat. I did not. My theory was incorrect, but I probably was just at the bottom of the line to get my slice of Ethereum. But yeah, that's all I got last night. So no watch, no vacation. But look, it's still pretty cool that they gave away $7 million to people. So, and I think there's 3 more days of the giveaway. So we'll have 3 more chances to see if we can win something. All right, so let's get into it. Good morning, good morning, good morning. And let's get started. I think let's start with silver. Let's start with silver and see what we've got going on. So again, we spent a lot of time talking about this last night. I'm not going to go super in depth. The simple sort of basic synopsis of why silver, and look at the candle right there. As you can see, just a massive move from last night. And this is just on SLV in and of itself, which is the BlackRock paper fund that tries to match your exposure with silver. That's now down 6.7%. On Friday, it was up 9%. Like if this was a stock, no matter how volatile the stock is, it's understandable. This is silver going up 9% on Friday, down 7% on Monday, which is just kind of crazy. I mean, you don't see this stuff happening often, but it's happening. Why is silver going up? Demand excitement over industrial output. I did a lot of research over the weekend on silver. Apparently, it's used a lot in industrial output, particularly around data centers. Same thing with copper. Structural shortages, massive demand. You've got that as a reason for why silver is gaining momentum. You've got the catch up to gold. There's something called the gold-silver ratio. Gold tends to go higher before silver tends to catch up. Silver is now playing that catch up. That's the reason why silver is going higher. And then the other big reason is FOMO and momentum, right? People are really excited about the concept of getting exposure to an asset that they feel they have missed. And as a result of that, you have chronic supply deficits. You have industrial demand, particularly in things like EVs, electronics, solar panels, data centers, AI hardware. You have interest rates that are coming down in general, which is exciting for some of these asset classes that theoretically should benefit from the fear of inflation, which they are, because the 10-year is not really showing you that the bond market's not showing you that they are done with their fears of inflation. But interest rates in general also are good for every asset class that needs a little bit more risk to get excited. And that's where you have silver and gold catching a bid. And then you got the FOMO trade. So you put a lot of that stuff together, you're going to get an asset that runs. Now, are you going to get an asset that runs over 80% this year? I don't think anyone could have predicted that. Even the biggest of silver bulls probably thought, hey, we're going to get a move, but we're not going to get like a crazy move like this. But you are getting a pretty crazy move. Silver is up 4x year over year. If you bought around that 20-30 range, you're now at around $70-80. So, I mean, it's quite incredible to see the momentum that's happening. But at the same time, you're also getting a lot of people that are getting overly excited, at least I would argue, for silver. And that's why I think we're getting red right now, because you also just have the trade that might be topping out a little bit. And I'm not short silver, so I have zero incentive to say that silver is topped out. I'm also not long silver, so I have zero incentive to be super excited about it. But when you see something like the Google searches go to an all-time high for silver, you start asking yourself, well, wait a second, do people care that much about silver? It's like, no, probably not. I mean, it's hard to imagine people care that much about silver, but the fact that people are searching for it that much also means that there's probably a heightened level of euphoria on the asset class that is not necessarily normal. And that creates a little bit more excitement. On Friday, silver was 3.5% away from flipping NVIDIA as the second largest asset in the world. That happened last night. It happened for 20 minutes, but it did happen. And so when you combine that with the level of excitement and also just the parabolic nature of the chart, it's probably going to take a little bit of a breather. Now, the funny thing about this is the moment where people have to decide if they're buying the dip or not. And the reason people have to decide if they're buying the dip or not is because now you've got a lot of people that are sitting on tons of gains on silver. And if they don't buy the dip, if this is not just something normal on a stock, right? Stock goes down, people buy the dip because there's still a fundamental story towards the stock. So they're not going to be super scared about it. And that's what keeps people excited to hold the asset. If this asset was entirely a trade that was rooted in trying to get exposure to momentum and momentum dies out, well, if the momentum doesn't come back, you got a lot of people thinking, hey, let me cut my losses and try to get out as quick as I can. Let me break even if I'm at least even on the trade, or let me secure my profits, because this is not something that has a fundamental narrative rooted in like cash flows. This is something that's tied to global macro liquidity. And quite frankly, there might be bigger players that are focused on getting the prices of silver down that I, as a retail investor, am not in control of. One of the simple examples, and we'll talk more about this later throughout the day, is China. Over the weekend, you had China's only silver fund, the UBS SDIC Silver's Future Fund, stopping new retail inflows after the prices were up 60%. And part of the reason for this is because China is the world's largest manufacturer of everything. One of the things they're the world's largest manufacturer of are solar panels, and a lot of silver is used in solar, not to mention all the different forms of the supply chain that it's used when it comes to AI data centers. And so you got I don't think any government is happy with seeing the rapid increase of price from silver. You had Elon Musk over the weekend saying this is not sustainable because silver is very important for industrial output. But you've got China and the CCP that might damn sure do something about it, given their economy is already struggling, and they might want to take action into their own hands by making sure that the price of silver does not get ahead of itself. So I think it's been a fun ride, and maybe that ride continues. I'm not smart enough to figure out if the ride continues or it doesn't. I also don't know if this is the day to go net short and be like, all right, I'm shorting the miners. I'm shorting all the derivative silver plays. I'm buying puts on SLV. Like, I don't know if this is the day to do it. Maybe it is. And the price action feels very convincing that, all right, this thing is finally getting ready to take a breather and there's maybe a lot of money to make on the downside. But for anyone who's going to be buying puts, you're going to be buying them when the market opens because you can't buy them right now while silver is down 7%. So you're already going to be paying a higher premium because those puts are going to be up a lot as soon as the market opens. And then the question is, do you have another 7, 8, 10% to go? Maybe, maybe not. So I think it's one of those things that if you're just playing it from the sidelines, that is totally fine. And we're going to have to see if this thing can continue. But yeah, that is what we have on silver. I see a lot of people saying in the chat, silver is great, but it's overpriced. Feels like it's topping out. Chart definitely feels like it needs a breather. Yeah, I think a lot of those conventional arguments make sense on silver. And ironically, it's not just silver. I mean, again, if you woke up and looked at the pre-markets, Bitcoin down $3,000, 2820 to be exact, from yesterday. I mean, so that's taking a 3% dip. Ethereum down 3.7%, 3,000 to 2920. ASTS down 2%. S&P 500, 687. I didn't even look at the S&P this morning, 0.38% down. So that's red. Microsoft's down 0.5%. Apple's down 0.5%. Meta's down 0.5%. Rocket Lab's down 2.4%. It's almost like the silver and gold hedge is not hedging, and it's just everything that's getting hit. Now, if we get a reversal on the S&P, we go up not 5%. That would be incredible, but up like 1% by the end of the day, or up 0.7%. Maybe silver reverses as well, which is why, using price action to determine wanting to buy puts on it might not be the smartest idea today. Or maybe we're setting up for an end of year rug pull versus an end of year rally. We'll talk about a bunch of different macro reasons associated with what could happen, but it's pretty much everything that's getting hit. I mean, Costco's up in the pre-market, which I guess is nice, but everything else definitely going down right here. So we're going to see. We're going to see how this ends up playing out. 7 Point said, aside from the price exhaustion, the CME group is raising margin requirements on silver futures effective today. Yeah, so they did announce that on Friday, that they will be increasing margin requirements. And we talked about this last night. In 2011, when silver fell 40%, the CME group raised margin requirements 5 times in the span of a week. And that was one of many reasons, but that definitely was an important reason for why silver ended up not being able to continue making the momentum that it needed to make to be sustainable, just given people did not have the collateral to pay for the margin or to cover their margin, especially if they had a net short position on silver as well. Now, let me just address this real quick because I'm sure people have been seeing this. There has been a rumor going on X. There is no source for this, but I know people are going to ask questions about it. But this screenshot has gone absolutely viral. I don't even know where this is from. It's got 6 million views. But it's a report that's saying a bank has gone under, a systematically important bank, because of their short position on silver futures, and they've been liquidated as they've been failed to pay their margin call. The reports are concealing the name of the bank, but it's confirmed that overnight the Federal Reserve was forced to bump another $34 billion into the banking system through the overnight repo facility. This $34 billion is on top of the $17 billion, which had to be pumped in 2 days ago. The bank is described as one of the largest players in the precious metals derivatives market. Again, I really don't think this is real. It has gone massively viral, which means if there is some report that comes out over the coming days that a bank has gone under, we will obviously know about it and we'll talk about it. Feels pretty fake, especially if you can't even get a source for that or on the name of the bank. Now, is the Fed pumping money into the reverse repos? Yes. I don't know if that necessarily means it's trying to save a bank that has gone under because they were short silver. Also, silver is down now. So if that bank couldn't have even waited 24 hours, which that tends to happen when it comes to margin being liquidated. But I think it's hard to believe if some $100-200 billion bank is now gone under because of their short position on silver. So feels fake, but it is one of those things I wanted to bring attention to people because you're probably going to hear about it. And so the question now becomes, is there any truth to it? And if there is, then we'll find out as well. BMNR right there down about 1.35%. Reddit's down 1%. Palantir down 1.3%. Hood down 1.6%. And Tesla 468. That one is down 1.38% as well. So I guess the question for everybody, and I'll put red or green in the chat for today's price action, are you buying the silver dip? That is the next question. Are you buying the silver dip? My take last was I'm not going short silver. So I'm kind of just staying neutral here. But I don't know. Is this an opportunity? Because now, as I'm scrolling X this morning, a lot of those people that were super excited about silver, they're like, no, this is a great opportunity. You got to get in now. Like now they're becoming emotional about having to defend the thing that they've become an expert about over the past 2 weeks, which is silver. And it's like, I don't know if this is a good opportunity now. If it was a stock with cash flows and nothing fundamentally had changed the narrative outside of the stock price, it's like, yeah, well, maybe it's a buy the dip. But with silver, there's a bigger macro issue here that we have to deal with. As Doug says, you don't have to touch every single trade. 100% agree. You do not have to touch every single trade, especially if you're not an expert in commodities, which I would not claim I am. I've done a lot of research on silver over the weekend just because I'm curious about it, but it's hard for me to make a directional trade idea over not really knowing the asset itself. I see a lot of no's in the chat. Feels like it's a falling silver knife. Yeah, it might legitimately be a falling silver knife as well, which could be the other issue right here. Nebius down 3% pre-markets. Data centers getting hit. Iran down 4% pre-markets. And CoreWeave down 3.68% pre-markets. Look, if we get a red end to the year, at least we all have each other. Okay? Even if we can't celebrate a Santa rally, at least we'll all be with each other. And we'll get to see how this ends up playing out. By the way, if we end out S&P 680, like it's not going to be a bad year. That's still what 14% for the S&P, 15%. That's not horrible. Just seeing 7,000 psychologically, you know, at the end of the day, if we get to 7,000, then it goes right down as soon as we get to 2026. It's not like it's like okay, cool, we got it, but it's not the biggest deal in the world. It would just be nice to see the year end out with that much momentum, 3 years back to back to back. But you know, do we get there? I don't know. We're going to have to see. Yeah, as Benny says, year to date, most of us have been blessed. If you bought in April, if you even bought in November, I mean, it's not going to be the worst thing in the world if the S&P ends up closing down a couple percentage points. But we got 3 days left. We got 3 days, and we got to see how this momentum plays out. In terms of what's going to be the agenda for 2026, let's get an update right here in terms of what Congress is thinking about. We've been briefly talking about the shutdown that is looming and that could be happening. So that's one risk to keep in mind. It could be one of the risks for if that intensifies, you know, we're going to have a little bit more of an issue going into 2026. But it is a midterm year as well. And I think based on it being a midterm year, you're just going to have a lot of different things happen next year that are going to be harder to fully understand. And the nuances of that might make the year not as easy to identify in terms of going straight up or going straight down.
Hey, Leslie. Well, look, the first things Congress needs to do as soon as they get back is to avoid a partial government shutdown. Remember, government funding runs out for most of the government on January 30th. Now, lawmakers had hoped to make some more progress. They wanted to move these 5 spending bills that would have covered a majority of government funding, but a number of conflicts are holding up that package. However, several Democratic lawmakers, including Senator Peter Welch, told us before they left town that they don't expect another shutdown this time around.
It's a different time frame, and the reality is that shutdown came where there was a real urgent issue to get health care on the front and center of the agenda. I think we accomplished that. So I haven't heard people talking about another shutdown.
Peter Welch said that he is hopeful that something can be done on healthcare in January. And remember, when the House gets back, those rank and file members are going to be able to force a vote on a 3-year extension of the Affordable Care Act tax credits. Now, while that bill is expected to pass in the House, senators of both parties have said that it is unlikely to pass in that chamber. However, senators are working together. There's a bipartisan group that's working on a potential plan to reopen the exchanges and bring back the credits in a limited capacity. So, guys, we'll be keeping a very close eye on both of those stories because that will likely dominate the first part of the year in Congress.
Emily, I was a little confused by his soundbite there. Why is it a different period for healthcare for the American public now versus in the latter parts of 2025?
I mean, it's a good question, Leslie. And certainly there are some members who feel like not nearly enough has been done. What Democrats do feel like they've been able to do, at least the ones who I've spoken to on Capitol Hill, is they were able to kind of use the shutdown to really highlight the issue, move the ball forward, kind of get it into the spotlight. And now they're saying, hey, now that it's here, we can try to find an agreement, or at least the American people know where the Democrats stand. Granted, for a lot of other Democrats, they say something actually needs to be done. But of course, that's going to rely on getting enough bipartisan support. And while there is that group trying to work together on a solution, and they are projecting a lot of optimism about it, we still haven't seen any paper, any text, which means that it could be a while if we even do wind up seeing a plan on how to keep those tax credits going. But
I want to have faith. I really want to have faith that we are going to be able to keep the government open, given we have till January 30th before the shutdown takes place. But we just saw almost a 2-month shutdown as silver now 7.6% down in October. So, I mean, the idea that that everyone's going to come to the table and be able to negotiate in an easy way at the beginning of the year, I don't know. It's just hard to believe. And so that is another risk that I do not think we can discount meaningfully unless there is any level of legislation, or at least a proposal of a framework for legislation to deal with the healthcare subsidies that we're going to have to see in the next couple of weeks. Because if we see it on January 30th, it's going to take at least a week, if not multiple weeks, to negotiate. So, I mean, that is a risk. And we already know that Q4 GDP potentially is going to come in 2% lower than expected because of the lack of government spending in those 40 days that we had to shut down, which means Q3 GDP was great. But if Q4 GDP is not that strong and that continues going into Q1 2026, that's an issue. So it's definitely something we cannot ignore. This article as well that Kris sent, which I've heard this headline constantly throughout the weekend, JP Morgan controlling a 40% stake in the silver market via options, futures, and market making activities. This could also be something that matters when it comes to bigger banks taking an issue. Steve over the weekend was talking about a fine that JP Morgan had back in 2020, which I remember covering this in 2020. It's a $920 million fine. It's been 5 years since I looked at the story. I didn't realize it was a spoofing fine, which is essentially them like putting out these fake orders that are not really real, and it's technically illegal. You're not allowed to do it, but all the market makers do it anyway to manipulate people into thinking something's happening when it's not. I didn't realize it was in the commodities market. It wasn't even in the stock market. This was back on September 29, 2020. JP Morgan's paid $920 million fine for manipulating precious metals market. So the idea that big banks are controlling commodities and making certain things happen even though it doesn't look like, or making things look like it's happening even though it's not happening. I mean, there is a track record, and JP Morgan got fined nearly $1 billion back in 2020 to stop doing that, which is a parking ticket for a company that's now worth $890 billion. So the idea that that's happening in silver, I mean, I wouldn't doubt it. Now, I don't know if I'm smart enough to use that information to trade long or short the asset class, but the idea that it's happening, I mean, yeah, it definitely feels like there's some wonky behavior in place. I just think in general with silver, there's too many forces because gold doesn't have the industrial use that silver does. I mean, gold has more of a store of value component to it because of the narrative of people believing in what gold signifies. Whereas silver, genuinely, 50% of its use case is industrial output. So this thing going up to the moon is just not safe for the global economy. And you probably have people that are much more powerful that know that care about keeping this price action sane. And that's where, you know, you might have those powerful people colluding with the big banks like a JP Morgan to get this thing to come back to normal. Yeah, exactly. Why do you think COMEX raised margin requirements on longs? It wasn't. That's a great point. It wasn't just shorts that they raised their margin requirements on. It was longs as well. AKA, if you're long silver futures, I mean, you have to have the appropriate margins, not just if you're short. Which when you think of margin requirements are rooted in how safe is the asset class, right? So like if you go super long on margin for, I don't know, what's something like Oklo, on your broker is going to probably ask you for a lot more maintenance because Oklo is super volatile. Whereas if you go super long on something, even if you're highly leveraged against Apple, it's Apple. So most brokers are not going to be that scared of if Apple reverses, because if Apple goes down 10%, Apple's probably going to come back over time. If Oklo goes down 10% and you're on margin, a lot of brokers might not trust that Oklo is coming back because of the lack of fundamentals. So silver, theoretically, you should say, hey, this is the almost second, third largest asset in the world, $4.6 trillion. I mean, this shouldn't need massive margin requirements if you go long. But the fact that that happened in 2011, which was subsequent, or it was a precursor right before the 40% drawdown, I mean, maybe history repeats itself this time. But we're going to have to see if that ends up playing out throughout the end of the year. Amit, have you talked about the supposed bank that got liquidated on silver? Yes. Right now, that is a rumor. We don't know if it's real. We don't know if it's fake. I know a lot of people are going to be asking about it because it's been going viral. But we just need more confirmation before we can meaningfully talk about a bank that got liquidated on silver. But that idea is out there. And if I doubt that a really big bank got liquidated on silver. But if it did happen, it's going to open up a lot more questions going into 2026 around the precious metals market. ASTS right there, down about 2.7%. Zeta is down about 2%. S&P 500 now down 0.43%. So S&P getting a low of day in the pre-markets right there. We'll see when the market opens if this reverses. Meta's down, Apple's down, and Microsoft is down. 60% of you voted that we will end red today versus green, 62%. So we've got a little bit more negative sentiment on price action going into the end of the day for today versus positive. Whereas Friday, I'm pretty sure most people felt it would be a little more green. And unfortunately, we did not get that excitement on Friday. Is Santa on paid time off? Santa might be on paid time off. Again, if we're going to get the Santa Claus rally, it's now. Like the cookies are out there. The milk is out. It's like Santa's either coming or he's not coming. And it's got to happen today. It didn't happen on Friday, the day after Christmas, but now should be the time. As you can see right here, Palladium is on track for its biggest loss since April of 2022. This one getting hit. This one, I think this and Platinum were basically the silver sympathy plays. And they're both getting wrecked in the pre-markets as silver is getting wrecked. And at the same time, your boy Saylor just picked up another $108 million of Bitcoin. 1,229 Bitcoin at 88,568. We talked a lot about crypto last night. Unfortunately, was not able to hold that 90,000 level. Once again, showing that any little bit of momentum is getting hit pretty hard. And I think there's going to need to be a lot of macro that goes right for Bitcoin and Ethereum to gain momentum. So if we see this gap up to like 88, 89, 90, it's like it just gets rejected at those levels and has been getting rejected for the past couple of weeks. So I think we need a clean break over 95 to be excited about it. But we'll still be excited if we get back to like 89,000 because we're at 87.3. So that's an $1,800 candle. All of us are going to be happy. But will it actually result in anything sustainable for these assets? Saylor's trying, but as of now, I think the macro is just not on the side. Actually, the macro should be on the side of crypto with quantitative easing, rate cuts, etc. It's just not cooperating. Now, there is a theory that a lot of this rotation comes out from gold and silver and goes to Bitcoin and Ethereum. Maybe that happens. Silver now down 8.4%. My goodness. 72 right here. There is that theory. It's just, I don't know if people are going to leave silver and gold and go to Bitcoin and Ethereum. So we will have to see as we get into the end of the year. Santa is hungover. Santa might be hungover. Did you buy VG stock or options? About VG on Friday, just stock. Again, a lot of this is borrowing conviction from our boys, Matt and Chris. I'm not the expert on VG. I will now learn more about liquefied natural gas since everyone is asking so many questions about it. But it's going to take me some time to really comprehensively understand this market in any meaningful way to talk about it. But that's the purpose of being an investor, right? This is the stuff that we have to do if we want to get better as investors. But yeah, took a small stake in VG, nothing too crazy. And I don't know if I get more conviction. I know, but Steve also bought it on Friday. Steve is getting more convinced they're going to be a massive player when it comes to energy. But this one right here up a little bit in the pre-markets at 698 as we get into the market open. Tesla right there still down 1.5%. Okay, cool. So let's get into some of the other AI headlines that we got to talk about. And then we will keep going from there. Would you open a new position on silver to sell a covered call? No. I wouldn't open a position on SLV just to sell a covered call. I mean, there's a lot of other stocks with probably a better risk to reward profile that you can get premium on when it comes to selling a covered call. I mean, I like SoFi covered calls right now. I think that is in a relatively decent range, and SoFi is a business that I think is going to do well in 2026. But with silver, again, it's nothing against silver. It's just it's like if you looked at the chart of this asset and then you said, hey, I want to either go long or short. Like I can understand why someone wants to go mega short. I can understand why someone wants to get in on the action, but you just don't know which side of the coin you're going to be on and which side is going to be right, which side is going to be right or wrong. And so I would not take any trade on silver for the pure dopamine of being right about it because you just don't know. And so you got to have a lot of like conviction on the price direction and be ready for the implications up or down. Now, again, it's looking like it's going to be an ugly open on silver, but who knows if that reverses? And if that reverses, a lot of shorts are going to get their face ripped as soon as the market opens. But we're going to have to see in the next 15 minutes as the market opens. All right, NVIDIA, let's get into it. So we talked about this last night. NVIDIA bought Grok over the weekend, $20 billion. NVIDIA right there down about 1.48%. I think this was an important deal for NVIDIA for a variety of reasons. They did not buy Elon's Grok. They bought GROQ, which is an inference play. It is not an actual model itself. It is inference for making models more effective. Essentially, the way I understand why NVIDIA did this is simply because their traditional GPUs use a lot of HBM, high bandwidth memory, and DRAM to be able to compose the actual GPU. What Jonathan Ross, who is the co-founder of Grok, who also was the designer of the Google TPU before he left to start his own company, figured out is essentially how to do inference technology and inference training without needing high levels of memory. And it's something called SRAM versus DRAM. And as a result, essentially, I think NVIDIA bought Grok because Grok figured out how to sidestep NVIDIA. They're an NVIDIA competitor at its core. And Jonathan Ross has a lot of respect for NVIDIA. And in the world of competing with NVIDIA, he's said many, many times that he views NVIDIA as the greatest company in the world. He thinks they'll be the most valuable company in the world. But he does think, he has said many times that the NVIDIA tax and the NVIDIA monopoly that they've imposed to become as valuable as they are is a byproduct of other companies not knowing how to get around the traditional scaling laws that NVIDIA has essentially had an intellectual property monopoly on for the past 30 years. And Grok figured it out. The problem is the supply chains that it takes to turn that into a viable business are very difficult. They slashed their revenue targets by 75% 6 months ago, but they still got around being worth $6.9 billion because of the potential that technology got so exciting. So why did they get a 3x on the buyout at $20 billion? Well, they probably realized it was really hard to make this a commercially viable technology, and it was either going to be Google, Broadcom, or NVIDIA that took them out. And Google made the most sense because Jonathan Ross literally was the founder of the modern day TPU that we have today. The sort of basic summary is if you can sidestep the level of memory that is needed, in particular HBMs, in these chips to be able to do inference, it sidesteps NVIDIA and your competitors that are in the ASICs market, like a Broadcom, which Citi put out over the weekend a great report saying that they are very excited for Broadcom and they think that they're going to collect a lot of revenue, particularly from Google and OpenAI, upwards of $80 billion over the next 2 years, just from those two customers alone. If Broadcom or Google were to acquire Grok, this would, I genuinely, after I've done the research over the weekend into this company, I feel like NVIDIA would be down 10% that day. Because you already have people wondering, can NVIDIA keep the upside to their moat? Can NVIDIA keep the momentum that they're keeping? We saw Micron be one of the best performing stocks of the S&P 500 this year. SK Hynix and Samsung last week are reportedly raising their memory prices by upwards of 20% because they're realizing they have a lot more leverage over the chip companies. Now, NVIDIA is going to be able to still pay that and probably keep their margins. NVIDIA can probably raise their prices as well and get away with it. But the problem is, at what point do the memory companies realize they have a lot of power over NVIDIA and they essentially get more favorable deals than NVIDIA? Now, NVIDIA's gross margins going from 73% to 70% is not that big of a deal. They can afford to take the hit and pay 20 to 30% more on their memory that's needed to be in their GPUs. But the double risk is if that happens and the street sees margins go down, that's an issue, because NVIDIA is trading, in a perfect range. NVIDIA really can't afford to have these things go the opposite direction, even though it shouldn't be that big of a deal, but it becomes a big deal. And then number two, if your competitors start to realize that they don't need the types of GPUs that NVIDIA is selling, and that there's other ways to do inference outside of having all the memory in the chips via Grok's LPU technology versus NVIDIA's GPU technology, I mean, that potentially slashes revenue targets for NVIDIA in terms of growth estimates. And NVIDIA that looks cheap at 24 times starts to not look that cheap if Grok gets swallowed up by a competitor and you start having some of these major foundation models buy things that bypass NVIDIA. And so I think it made a lot of sense. I think they had to do it. It's better than, I think it's way freaking better than giving me a dividend of 1 cent a share or buying back stock. And, NVIDIA has $60 billion in cash. It's also better than all this circular financing stuff. Like, that stuff just makes the market cringe. So actually doing a proper buyout, which is not really a buyout, it's like an acqui-hire for Grok's talent, but it's effectively a buyout. Doing that makes a lot more sense than giving a dividend. So I think it's good. Now, the problem is NVIDIA right here down 1.5%. I was saying this last night. I don't see a world in which NVIDIA gets anywhere near 250 next year and makes like this massive move that it probably deserves to make if the market doesn't go up with it. So I think you need to believe in S&P 8,000, S&P 8,200. You need to believe in a massive bull market for NVIDIA to run, or NVIDIA is just going to normalize at this multiple that it's trading at, which is obviously ridiculously cheap when you look at it compared to Walmart or Costco. But the pushback is going to be that Walmart and Costco don't have this massive cyclical AI trend. They're always going to be around, and they're always going to have predictable cash flows. Is that enough of a reason to give them a 40% higher multiple than NVIDIA? I don't think so. But right now the market does. And so NVIDIA is going to have to either keep up massive growth expectations that are accelerating going to next year, which I think they will, which is the funny part. And that's why I think they'll get re-rated. But if there's any slippage there, and I think that's why buying Grok was a rather defensive move to make sure there's not a slippage, that's where we could see some multiple compression, although I do think the multiple has already been compressed a decent chunk. And so I guess going into the end of the year, or going into the beginning of 2026, we'll get more updates on that. Nebius right there, that's down 3.7%. IREN, that's down 3.7%. CoreWeave, down 3.76%. All the data center plays are also getting down. This was so blatantly an antitrust violation. 100% it was. And so was Meta buying 15 billion worth of scale AI. And so was Google buying character AI for 2.7 billion, quote unquote buying. I mean, all these companies realize that if they actually want to go through the FTC to get an acquisition, it's not going to happen. And they don't have the time to deal with what Netflix is dealing with in regards to making acquisitions. I mean, they need to like get the job done. So absolutely it is sidestepping the traditional antitrust process. But I mean, I think they kind of need to in order to continue getting some of this momentum. Captain Dave says, I've got NVIDIA at a 1620 average. I'm selling next year. I don't see much upside left, at least not the upside I want. Yeah, I can't blame people thinking of those thoughts. First of all, if you bought it at 16 bucks, I mean, you're sitting on a 10x here, more than a 10x. So at the end of the day, you know, that's probably life-changing amounts of money that deserves to at least have some profits that are taken. But number two, it's just like, I agree with that. If you're buying NVIDIA right here, which I think is cheap, objectively, I think trading at 25 times next year's earnings is not expensive, especially for the quality of company you're getting, the moat that you're getting. The question is, if the best you're seeing next year, like the absolute best is 250, because I don't think we're going to 300. And I think 250 still is a stretch, not be from a valuation perspective, from the pure fact that the market cap, right? Like at the end of the day, when you're adding that many more hundreds of billions to market, it's just not easy after you've already added almost 5 trillion. And so things start to get a little bit more difficult in terms of the comps and the ability to just sustain that number. Well, what are you buying NVIDIA for? Also, if you're buying NVIDIA for, let's say, a 2 to 3x over the next 5 years, that's fine, but you're also taking on a lot of risk just for a 2 to 3x. Now, 2 to 3x is phenomenal, don't get me wrong, but there's probably a lot of other stocks that are out there that are trading at much smaller market caps that are probably growing faster than NVIDIA, that don't have NVIDIA's moat or NVIDIA's publicity, but they theoretically, if you identify a gem, could do very well. Now, granted, if you're owning this thing at 16 bucks and you think this thing's going to 10 trillion, then it's almost like a lottery ticket. But the upside now faces a lot more risk than reward versus when it was trading at 90 bucks in April, you know, where the risk reward was skewed obviously to the upside. I mean, again, NVIDIA up 30% for the year, but it's up 100% from the April lows. And I don't think that's not something that we can necessarily deny right there. Broadcom over NVIDIA. Well, again, Broadcom's multiple is more extreme than NVIDIA, although I do think Broadcom, if the Citi analysts are right about the level of revenue they're going to be collecting from OpenAI, Google, and Meta, which is what they discussed in the report, Broadcom should have significant upside towards it, just like NVIDIA. But again, does Broadcom trading at 1.67 trillion go to 4 trillion? Does it double from here? And if it is, what is the risk you're taking on to get that done? Now, granted, I think if you're buying one of the Mag 10, you can't be assuming a double. You got to be assuming hopefully beating the S&P. And that would be on average 20% gains over the next couple of years, assuming the S&P, you know, goes up 10, 15%. So that's realistically what you're buying it for. Now, Amazon, on the other hand, I think a lot of people think this one probably deserves to be at 300, which would be a lot more than just 5 to 10% from here. But this one also hasn't moved. NVIDIA's moved, Broadcom's moved, Apple has moved, Meta has moved, Tesla has moved, Amazon has not moved. It's up 30% for the past 5 years. It's the worst performing stock in the Mag 7 over the past 5 years, which, you know, speaks to the potential massive undervaluation on this versus names that actually have momentum and have made a deeper move. So look, I continue to hold my NVIDIA. I have no intention of selling NVIDIA here. And I do think NVIDIA does well next year. I'm also trying to be realistic. Like buying it at 90 is different from buying it at 190. And the question then becomes, doesn't make that jump next year to 250, 275. And like, if it does, I don't think anyone's surprised. But if it doesn't, it, tops out around 220, 230. That's still great for everyone who bought at 90, at 110, 115, 120, even if you bought at 140, 150. It's just, do we have the sort of like massive Super Bowl level of excitement going into the end of the year? I think that's what we're going to have to see as we get into 2026. Speaking about the Mag 7, here's some coverage on the Mag 7 divide and how that further could happen going into 2026.
Magnificent Seven are no longer trading as a team, and the gaps could widen in 2026. Mackenzie Sigalos joins us now with more. Hey, Mac.
Hey, Leslie. This was the year the market stopped trading the Mag 7 as a monolith and started separating winners from losers based on who can actually monetize their AI bets. Let's start with the winners. Alphabet, with a 60 percentage point lead, has street cred across the stack. Its AI chip, cloud distribution, and then its LLM Gemini. It has been topping key benchmark tests. NVIDIA is up more than 40% and now the world's most valuable public company because it remains the backbone of this year's record-breaking data center build-out. Now to the laggards. Amazon still has the biggest cloud business, but AWS is growing more slowly than Azure and Google Cloud. The bet is that its in-house AI chip Trainium wins on cost, but adoption hasn't matched the momentum that investors see in Google's custom chip ecosystem. Now, unlike its hyperscaler peers, Meta does not have a cloud service and lacks a clear revenue story tied to its AI investment. They say the benefit shows up in ads, better targeting, better performance, but that's a harder ROI story for the market to underwrite. And then there's Apple. It's largely been sitting out the infrastructure battle, betting that distribution wins by owning where consumers actually use AI. And it may be near the bottom now, but if model quality keeps converging, distribution could matter a lot more than who trained the best LLM. Guys?
So then, Mac.
I think that's a pretty simple summary on where the divide is between the Mag 7. Amazon continues to remain a top pick. My two big Mag 7s, and again, I will have an article coming out tomorrow on Substack on portfolio updates and strategies for 2026. But my two biggest Mag 7 are Amazon and NVIDIA. I mean, obviously, I continue to be pretty bullish on NVIDIA. I think NVIDIA will do well next year, even if it doesn't do massively well. It's not a sell at these levels at all. You just can't justify selling NVIDIA with the multiple that it's trading at here. Amazon is a straight up, like, you buy this thing and you really buy the dip if you see the long-term tailwinds on their operating margins going higher. So I think Amazon and NVIDIA are the Mag 7 picks for next year. And now we're just going to have to see if 2026 ends up giving us 4 years back to back on this bull market. Here we go, folks. Monday, December 29th. Thank you, everybody, for being here. It is 9:30 a.m. The stock market is now open. All right, wake your ass up. The market is now open. S&P 500 opens down 0.45%. That is a pretty quick reversal from the momentum we saw back on Wednesday when we were up almost 1%. Friday, we ended flat at 690. We are down right here. Gold opens down 8.63%. Silver down, 9.2%, and gold down 3%. Wow. Silver was down 7% during the pre-markets, opens down 9.2, gold down 3.49. Gold, even gold, the move on gold, 3.5%. It's not a small move on gold. It looks small compared to silver, but those are two massive moves on commodities that went parabolic over the past couple of weeks. Nebius, that's down 2.4%. Grab is flat. Nike is down 0.5%. BMNR is down 0.5%. MicroStrategy is flat. Palantir down 1.5, Robinhood down 1.2, Tesla down 1.8, Open Doors down 2%, Micron is down 2%, Amazon's down 0.5%, NVIDIA, ugly red candle, 2% down on NVIDIA. All right, so the market's definitely upset at everything if they're taking NVIDIA down as well. Broadcom, that's down 2%. VG, baby, that's your hedge today. That one's green. VG up about 0.42%. Silver right there again, down 9%. AppLovin, that's down 2%. AMD, that's down 2.3%. Costco's down 0.5%. ASST, that's down 1%. Ondas, that's down 2.4%. Intel, that's down 0.36%. Planet Labs, that's down 1%. Where is the lab of rockets? We are up. Rocket Lab going green. Interesting. So that's high beta growth. That's going the opposite. Is ASTS following? ASTS is not following. ASTS is down 2%. Weird. You would think ASTS follows, but it is not. That's down 2. Rocket Lab holding on to 71 quite nicely. That goes green on the day. Apple just went green. Eli Lilly just went green. You have regional banks going green with TFC. Verizon just went green. PayPal is about to go green. D-Wave, you got Quantum going green. So you got a lot of different parts of the market that are spiking up, even though NVIDIA and the broader S&P is down. Coinbase just went green. Netflix, that's weird. Why the hell did Coinbase just go green? Netflix is green. Robinhood potentially is going green. Dude, maybe it was a head fake. Maybe pre-markets were ahead. S&P getting a little recovery right there. 687.96 up from 686.65. Nebius right there. Look at that. 84 to 8, almost 86. Even CoreWeave, it was down 3. Now it's barely down 1. Grab just went green. ETH is pumping. Hold on. Let me check silver. It was just down 9. Silver's now down 8.6. 9.2 versus 8.6. I'm not saying that's a reversal or anything, but it definitely is not continuing in a free fall. And neither is a lot of market. BM&R just went green, 2.5. MicroStrategy is up 1. Bitcoin just got an $800 candle, which is what's explaining some of that. ETH probably got a decent candle as well. 29.64. Yup, ETH right there from 29.20 to 29.45. NVIDIA still red, still down 2%. So NVIDIA not really getting a lot of recovery, but 185.91 to 186.30. Definitely not free falling. VG, that's up 2%, 710. On Mr. VG. Iran, did we just go green? Iran did go green 1%. So Iran, the first data center stock to turn green on the day. Nebius trying to follow suit. Cypher and TeraWolf, those stocks also going green on the day. Wow. So as soon as the market opened, you had about a minute, not even a minute, almost 30 seconds of seeing some of this pain. And you know, it's 4 minutes later, maybe this reverses back to the downside, but you are seeing a little bit of an immediate reversal from those absolute lows, if those were the lows for the day. D-Wave right there, that's still green. Visa just went green. SoFi was down at 26.50, now at 26.97, still below 27, and then Coinbase 238. That is green. That is green as well. More broadening of the rally, potentially. Well, I mean, the fact that the S&P has held up over the past couple of weeks, even though tech has not held up as well, already proves that JP Morgan, Goldman Sachs, all those names, Eli Lilly, et cetera, have held broad in this rally. Question is, what leads the rally if we do get an end of year rally over the next 3 days? And one would argue it probably is technology, not JP Morgan. Because like, how much higher is JP Morgan going to go in the next 3 days to really fuel that rally? But we will find out over the coming days. AppLovin, though, down 3.5. Feel like there's something specific on AppLovin. That one's not reversing at all. That one's getting a nasty red candle. Shopify goes flat on the day at 170. Saidu Space, that's up 18%. That was one of those space companies that I think pumped last week because space was in their name. So that is green. How about Nike? Nike is 61.07. That's up. Tim Cook did buy $3 million worth of Nike last week, potentially signaling that you got insiders feeling it's a bottom. Rocket Lab goes green again, and then Ethereum at 29.50. SoFi just went green. There she goes. SoFi, wow, look at that, 26.50 to 27.15. I don't know. Does the pre-market feel like it was a head fake? Does the pre-market feel like it was a head fake? Gold is, I'm not saying it's recovering, but it's now down 8.2 from 9.7. That's almost a 2% swing within the first 5 minutes on silver. Gold still down 3.4, up from 3.6 down. So, I mean, like, if price action was dictating the reason to go short silver, a little bit of a reversal, does that mean the short silver might not be the best deal? Again, if you're buying puts on silver right now, you're paying a heavy premium because you didn't buy them on Friday when the premium was cheaper. You're buying them today when the premiums are up because obviously this whatever asset you're shorting is down a lot today if it has to do with silver. So the put buyers are the puts. The people who bought puts are winning if they bought them last week. Today, you're paying a premium on something that potentially could be putting in a short-term bottom. I'm not saying that it is, but if it is, I mean, those shorts are going to get burned. But if silver is going to just continue falling backwards, then those puts get burned. But you are paying a higher premium today than you were on Friday. Robinhood just went green, almost at 119. There you go. Rocket Lab, 71.49. ASTS catching up now, 72.89. That's up 1.2%. That's up 1.2%. They're messing with our heads. This is a bull trap. It might very well be a bull trap, but look at the S&P. She's fighting back, baby. 689, potentially 690 on the way. I mean, if she reverses green, that would be quite exciting to see. Grab up 1.3. Grab just went green. 522. Nebius just went green, joining Iran. CoreWeave just went green. All the data center plays seem to be relatively green right now. MicroStrategy up 2% on the day. Bitmine up 4% on the day as Ethereum's getting some love. And Reddit right there is up 1%. UBS reiterated their neutral price target on Nike at 62. Their internal survey showed brand momentum is improving, but analysts expect the turnaround to take longer than expected. I agree with that. I think Nike is safe at these levels. I don't think it's heading that much lower. If you just look at it on a 5-year chart or a 1-year chart, 52 was the absolute low a year ago. It's at 61. You're paying a dividend to wait. But you have to ask yourself, do you want to be stuck in a retail name that is struggling to turn momentum around, especially in China, even with the insiders buying? Or do you want to allocate to a tech stock that might be more undervalued, that has better margins, et cetera? So I don't think Nike is scary here, but I also just don't know if it's worth the capital. But for something that might be flat for the next year, even if you get your dividend, and then maybe there's that massive move back up into the 80s, 90s when it actually shows the reversal of their strategy, which might take a lot longer than a year, I think that would be the thesis to bet on Nike. Unless they change something and Nike just catapults next year, but it's not easy to do that. And that's what the CEO said on the call last week as well. Robinhood right there, 118, TeraWulf 1178, SoFi 2723. It's nice to see that. Palantir, that one as well, getting a little bit of momentum back up. It was at 185, now at 187, hit 184. S&P, she's trying for 689. She's really trying up from 685, but she's got to pull through right here. Broadcom still down a little bit on the day, 0.64%. NVIDIA still down 1%. NVIDIA was down 2.5 to start off the day. So you do have a little bit of recovery right there. And then Amazon still down 0.3. What do you think about Oxy? I think a lot of the oil and gas plays are not as exciting given oil prices have been relatively depressed. Oil still under 60. Brent crude is up 2% on the day. WTI at 58.02. I mean, I think you have to know a lot about the dynamics of what's going to happen with oil next year to be excited to buy the oil plays. Because obviously they have not had a good year this year. And if Trump is dead set on his agenda of getting oil prices to continue going down, which, I mean, just driving around New Jersey, gas prices, I mean, it's amazing seeing something. I mean, I saw 239 yesterday. I mean, that's incredible. Those are really low gas prices. And I think Trump would like to keep them low. So I think that the oil companies become interesting if you can match their output and earnings growth to the demand we're seeing in AI, which is why people are saying Exxon, Chevron, these are like plays to think about. But I think there's more specific AI energy plays versus the oil companies that are actually going to get a direct benefit, which is why, Oklo and SMR are getting these valuations now. They might not have anything tangible yet, but I feel like there's better plays out there that are specifically tied to AI energy versus the big oil companies. SoFi right there, 2718. That one continues green. Robinhood just flipped red. Ethereum, 2950 as well. Amid with oil being so cheap, wouldn't it be smart to buy oil names such as Chevron? Yeah, if you think oil is going up. But that goes back to the argument around Trump not wanting high gas prices. And he also doesn't want massive inflation. So I think the administration definitely has an incentive to keep those prices depressed. But theoretically, if you think there's a cycle where oil prices go higher, then yes, this would be the opportunity to get a bit more excited about it. You already got VG, that's oil and gas. Yeah, and again, VG is not necessarily connected to the same type of macro ecosystem plays from my understanding that Chevron and Exxon are connected to. Those are just way bigger companies that are doing different things. But VG is also down 75% this year. So that's a little bit more exciting to me as hey, let's do a little bit of bottom fishing versus an Exxon or Chevron. HIM's right there getting a little bit of love, 34.49. That's up 0.51%. Uber, that's up 1%. Bitmine holding on to that 3% move. Same thing with MicroStrategy. So crypto having a little bit of a day. If crypto prices were similar to where they were last night, those stocks would probably be up a lot more. But they are getting 3 to 4%. And then Apple at 273. Look at Poet. So Poet was actually named as Poet. That's up 6%. There were 10 stocks on Wall Street Bets that were named as these stocks to look out for 2026 based on upvotes in the community. And Poet has made that list. So Amazon, Rocket Lab, ASTS were your top 3. Then you've got Google there. You got Nebius, you got Reddit, Poet, SoFi, UiPath, and Micron. So very heavy retail names. I mean, these are names that retail talks about a lot. UiPath's getting a lot of momentum in terms of just excitement as well. Rocket Lab, ASTS, obviously your space trade. You got Amazon and Google. Google has made a lot of people a lot of money this year. Amazon, people are thinking can do what Google did. Nebius, that's your data center play. And then you got Reddit and SoFi. So these are the names, at least according to Wall Street Bets, you should look out for going into 2026. VG right there, 703, Palantir 187, Oxy 39.97, Cypher, that's up 2.5. Where is Lemonade and Oscar? Lemonade is down 0.5%. They have been down about 10% over the past week. And then Oscar, still no clarity on those subsidies, 14.65. That's down 1.65% as well on the day. Let's go back to silver and see what we've got going on. Mercado Libre, by the way, up 1.2%. Mercado Libre, I saw a stat over the weekend that was absolutely crazy on Melly. This company has put up 30% revenue growth for 27 straight quarters. I mean, I couldn't believe this, dude. There's 60,000 public companies in the world. Only one of them has maintained 27 straight quarters of 30% revenue growth, and it's Mercado Libre. Now, their margins are not incredible, which is why they don't get the massive premium, and the stock's been kind of dead this year, especially with increased competition. But I mean, talk about a company that has a moat, 27 quarters of 30% revenue growth. It's quite incredible to see. So maybe Mercado Libre definitely deserves a bit more of a deep dive. But that stock right there is up 1.17%. Silver is now back down 9%. All right. So look, it's an ugly candle on silver. And again, the time to go short this was on Friday. I don't know if down 9% is the time to be like, all right, it's going down another 30%. Maybe it is. But I'm not sure if that's exactly the play. Nonetheless, it is down today. And every silver derivative that's associated with it is also probably down as well. Why is Peloton up? Why is Peloton up? That's a good question. Peloton is up 2.39%. Not sure, but it is up. SoFi 2730, that's up 1% right now. And then IREN, that's up 5%. Palladium down 15. Let's do a poll in the chat. What do we think? Is the party for silver over? Yes or no? 58% of you said we're going red on the day. Is the party for silver over? Chris says 10% is nothing. Look at the chart. It's going a lot lower. I mean, I can respect that perspective because the chart looks stupid on this thing. It looks really stupid. Like, look at this chart. This is just a monthly chart. It's not even a yearly chart. It's on SLV. It's 51 on December 4th. It got to 72. 51 to 72 for a stock is crazy. But for a commodity is like also just like this is becoming a little ridiculous. And now it's back down to 66, down 7%. So yes, just looking at this chart alone, you can look at the yearly chart. The yearly chart looks even crazier, dude. SLV was $26 in April, 71. Which again, if you bought certain stocks, that has outperformed silver, even if you bought it in April or even if you bought it before April. But this is still kind of crazy to see this on a commodity. So I can understand why going short here is attractive. I just don't know if I would necessarily do it. But if the trade is over and there's money to be made on the downside, you're going to have a lot of people jump in and say, all right, I'm taking advantage. But here's the thing. You need a lot of people to still believe that this is not a dip. You need a lot of people to believe this is just like a little hiccup, that this is not the start of anything bad. And I don't know if it's early enough to say that this is a hiccup or this is the end of the party. But you definitely have a lot of people that are going to try to take advantage of it if they do think it's the end of the party. look at the price in China. Well, the China arbitrage has been one of the other exciting parts of this trade for a lot of people. I mean, China's been gapping up a couple bucks every day at the open, at least last week. In Australia, silver was at $90.52 an ounce last night. I mean, that goes to show the level of craziness that people were willing to pay for the fact that they were getting pitched a $90 price and people were buying these silver bars. But the question is that going to be sustainable to match up from a global perspective? Rock Lab right there, 71.54, S&P 500, 688, Lulu 212, that's up 1.63%. Coinbase goes green along with crypto. And then you got Netflix right there at 94.65. Tesla, unfortunately, has not been able to hold any of its momentum. It got very close to 500 last week, now back to 467. So 498 was at least the short-term top for Tesla. And now we're back to 467. That's also down 1.54%. And I think for Tesla to get back to that $500 level, you need to see a lot more progress on robotaxi. Because the reason it pumped, I think, was those Austin robotaxi videos that came out and got a lot of people thinking, all right, the robotaxi is here. And then it was also like, well, wait a second, it's not really here yet. We see the evidence, but we don't really see it in action fully. And I think that's why Tesla took that dip as well. Doug says, how hilarious is it that we didn't see the giant blow off tops on names like Palantir, Hood, or NVIDIA, or crypto, but we're seeing it in metals? Yeah, it is quite kind of funny. I mean, you probably had a lot of people that were thinking Palantir was going to get a blow off top, which it did. And then it came back with the market. Palantir went all the way to 140, 147. And it's back at 185, which is not back at the absolute high levels that it was at around 200, but it's still not horrible. Given that, same thing with Hood. I know it's not at 150, but from 100 to, it did get to 130. Now it's at 110, 115. It's not that crazy either. Same thing with NVIDIA. Went to 200, came down to 169, now back at 190. But if we're seeing a blow off top on silver, on a commodity, like a full blow off top, similar to 2011, and we're not seeing it in the equity markets, it is crazy where the state of the economy is for us to be seeing that. And I think a lot of that's probably influenced by the 10-year that continues to not really budge from that 4.1 level right now at 4.11%, down a little bit on the day. But this thing potentially going below 4 might be the reason why silver starts taking a little bit of a breather. If the bond market starts not caring as much about inflation, if silver and gold is your hedge against inflation. I mean, the bond market giving you a 10-year that's below 3.8, I think is the easiest way to predict silver and gold go down. That's just not been happening after multiple rate cuts. But if that's the narrative in 2026, then maybe silver and gold have officially topped. And I think time will tell over the coming weeks if that's the case. Why is Orbs up? Orbs initiated a buyback today of 125 million. That's probably why they're up 30%. Again, I don't really understand Orbs. I said this when it came out. I don't get this whole biometric scanning for AI identity. Like, I think it's going to be important. Do I want to buy a digital asset treasury that's rooted in that? No. Like, I like Dan Ives. I think he's a smart guy, but this is not something that I'm interested in. So they announced the buyback today. I think that's why the stock is down a lot from the highs. So, I mean, yeah, it makes sense to do a buyback, but I also don't really love the idea of WorldCoin. But that's the reason why it's up on the day. SoFi right there at 27, Oxy at 40, and then Nike at 61.72. I bought Orbs at 10. Yeah. I mean, the day it came out, dude, it was, I didn't understand it. Like, I really, like, Ethereum I can get behind. I think there's like a long-term trajectory there and it makes sense. And you can DCA into that. I don't know what WorldCoin realistically is going to do. I don't know why the digital asset treasury on WorldCoin would get a premium to its multiple. So to me, it's hard to get super excited about it. Rock Lab right there, 72.30. That's up 3.4%. And that one actually, one of the best names on the day. CoreWeave still green. Iren and Nebius. Well, Nebius went red, Iren red. Iren is still green. So Nebius is actually the red out of the data center plays as CoreWeave and Iren continues to go higher. Young Money, thanks for the super chat. And Mick, can we talk about Hood? What is your price target? I feel like it has been struggling. I don't know what my price target is on Hood next year. I have no idea. I think that their growth will be sustainable next year unless we get market volatility to the downside. And if it's a year filled with market volatility to the downside, Hood is going to struggle because their comps are really difficult to match and the trading volumes might not be there, especially if crypto goes away in terms of excitement, which if we enter crypto winter, then Hood's losing, 30% of its revenue at the high levels on crypto. However, it's hard to bet against Vlad. And I think they're going to have another 5-6 products next year that are super important. They've got the banking catalyst. They've got prediction markets. They've got the other parts of the business that even if they're not growing massively are still going to grow. So it's going to get them that 25-30% growth. I think analysts are expecting 18% growth. So I think Hood will outperform that. And they have buybacks available. So they can maintain their EPS growth simply by having $1 billion left to buy back their stock. But the thing is, they were growing 100% in 2024 and 2025, like 50 to 100%. Some quarters it was 60, some quarters it was 75, some quarters it was 100%. For them to do that, they would have to be putting up $2 billion of revenue every quarter. I don't know if the market's going to be good enough, if the environment's going to be good enough for Hood to do that. Because essentially you need a massive raging bull market for that to take place. And Bitcoin's got to participate in that as well. I just don't know if we get that next year. I think we get a bull market and we get probably 10, 15% on the S&P 500. But is that enough to create those level of volumes? And if we have a quarter or two where you have a lot of downside volatility, choppiness, whatever you want to call it, midterm years tend to be a little ugly in the 4-year cycle. I mean, that's where Hood's volumes go down. And quite frankly, that will create a phenomenal buying opportunity on the 10-year trajectory of Robinhood, because I think in 10 years, this is going to be one of the most important financial institutions in the world. But short term, what does that mean for the price? I really don't know. It's just a name that's very volatile that moves with the market. And it's high beta. So if you get a market downturn, a lot of these high beta multiples are going to get hit, including Tesla, Reddit, etc. So I think if you bought Hood in April, I mean, you hold long and strong. Like there doesn't need to be a need to sell Hood. But net new money coming into Hood today, you've got to assume 2026 is going to be a massive, massive bull year because Hood is going to have to beat over $1 billion of revenue every single quarter, which is possible. But they're not a SaaS business that can get a new contract tomorrow and then amortize that contract and get these reoccurring revenues. Like the market needs to do well for them. And same thing with Coinbase. And I think those are the biggest risks for these companies going into next year. Not enough of a dip to buy more silver. Silver is still, wow, 7.93. Again, it was just down 9. Now it's down 7. That's why I'm saying I don't know if the short here is, if you're buying the short when it's down 9% or getting super excited about the short, what if this 9% is enough pain? What if this is max pain? Now, what if it's not? That means it's going a lot lower. The shorts are going to make a lot of money. But what if that's enough? I mean, you gotta see this falling knife continue to fall. Right now, it's not continuing to fall. It's oscillating within this down 7%, down 9% range. You haven't seen down 10% yet on the day. Maybe it's going to take a couple more days to get there, but I still think we need a lot more data to see what's happening with silver. NVIDIA right there, that's down 2%. Palantir, that's down 2%. Then Tessie, that's down 2% as well. What do you think about UNH? I think UNH should be safe next year. They've got to increase their EPS targets. I mean, that's the reason why the stock is down. And they did a little bit of that in the last earnings, which is why they got that bump up to I think that's like 389, right? They got to, 370. No, 389, 385 at the highs. I think if they increase their EPS targets, the stock's undervalued and they should do well next year. But again, you got to really believe that UNH can increase those growth targets. If not, then I think you continue DCA, collect your dividend, and stay long, as this one theoretically has also probably bottomed. I mean, I don't know if you get 230 again on UNH. That one, sentiment just got destroyed at that point. I think we're probably past that level on UNH. SoFi right there, 2703, going red again on the day as that one's down. And then Nike at 6157. What do you think about Zeta? So again, I wrote my Substack. I think Zeta's undervalued. It's been trying to break above 20 multiple times this year, and it's got rejected. Even today, as you can see, down 2.6%. It is really hard for this thing to meaningfully break above $20. But I think it's cheap. And again, I wrote the Substack. I'll put in the link in the description. Look, I established the position. If you read through the valuation part of that Substack, it's hard for me to imagine why this thing trades at 2.5 times forward sales, given their execution. There's a lawsuit, there's a short report. I think those things are relatively inconsequential. So it is speculative, but it is also a name I do think does deserve a relatively higher multiple. And you're looking at a $30, $35 stock with a not even crazy multiple. I mean, like if you go to like 7 times forward sales, that's not crazy for a company that's growing at 34% and beating and raising expectations every single quarter. And they've done that for the past 17 quarters. So I like Zeta, but it is more speculative going into 2026. Tesla right here, nasty red candle, down 3%, 462. As Tesla is down. Management is not good. I have the opposite feel. I listened to a lot of David Steinberg over the weekend. I actually like David a lot. Maybe it's just a different perspective, but I think he's one of the better communicators in the public CEO markets. I think he's very clear and concise in terms of how he communicates Zeta's message. So I don't really get weird vibes from them. Maybe I have to do more research. Again, it's only been a couple weeks really looking at the name, but I don't get the shady vibes from him. S&P 687, tried to do 689. That one went straight down. Amazon 232. That one's down. And Iran holding up. Hood just went red. All right, so we're seeing a flip back towards the red. Palantir at the lows of the day is down 2%. Silver not recovering, but it's not flipping lower with the S&P right here. It would be really funny if silver actually starts recovering and the rest of the market goes down. Well, we've seen a lot of wonky stuff over the past couple of weeks. SoFi back below 27 again. Why not? Why not? Let me see if there's any other headlines that I missed in the morning for this. I feel like a lot of this is just end of year excitement / momentum. Unfortunately, it's more to the downside. This whole idea of fund managers are going to chase stocks going into the end of the year. I don't think we really saw that happen, guys. I mean, like, has there been any stock that you think massive institutional volumes have been chasing? Oh, there's a good chart. Let me pull this up, which actually shows a little bit more institutional selling over the past couple of weeks. But like, I don't see the chase on these names. And the thing is, if the S&P 500 doesn't have a massive return, you kind of don't need to chase, because then your benchmark is not as far away from your performance. And then boom, you're not underperforming, which is the only thing a fund manager actually cares about. So not sure exactly if we're seeing that chase. Maybe silver was the chase. And if silver just topped out, then that was a bad chase by fund managers. Take a look at this. This is from Bank of America. U.S. equities had $5.1 billion of outflows last week. The week before that was $3.6 billion. So you got basically $9 billion of outflows from an institutional angle, as they were the biggest net sellers over the past 2 weeks. This is the 10th week of net selling over the last 14 weeks. Single stocks lost $8.6 billion of outflows. This was the 7th weekly sale over the last 8, bringing total outflows to $37.8 billion over the period. Institutional investors sold the most at $5.5 billion, turning into net sellers for the first time in 5 weeks. Retail investors sold $1.7 billion last week. They sold $1.5 billion the week before. So the fact that the markets have actually held up is incredible, given there have been a decent amount of people saying, I am taking my profits, even if I have to pay taxes going into the end of the year. And you're just not seeing that sort of super excited FOMO chase into the end of the year. And realistically, you need stock prices to go much higher for people to compound on that level of FOMO. But you are not seeing that right now. Do we have home sales today? Do we have some of this data? Let me see. Yes, we do have home sales. Pending home sales month over month for November. Wow, 3.3%. Consensus was 1%. That's a pretty big move. 3.3, the month before was 2.4, and the consensus was 1%. We'll get year over year in a second, but month over month, that's pretty decent. Let's get a little bit of coverage on this as well.
3.3% from October, and we're 2.6% higher than November of last year, according to the realtors. That's a nice beat. The street was looking for a 1% gain. It was the strongest read of the year and the highest level in nearly 3 years. This count is based on signed contracts, so people out shopping in November, when the average rate on the 30-year fixed mortgage really didn't move much at all, but was lower than it was over the summer. Rates today are right around where they were at the end of November. Now, pending sales were up in every region, but the West saw the strongest jump, up over 9% month to month. The realtors say more supply is attracting buyers to the market, and affordability is improving slightly with lower mortgage rates. 22% of NAR members said they expect an increase in buyer traffic over the next 3 months. That's up from 17% in October, but down from 24% 1 year ago. Fewer realtors expect an increase in seller traffic. Sarah?
Hey, Diana, thank you very much. Good to see rising pending home sales. We're going to dive here into this debasement trade, even though Mike Santoli poo-pooed it last hour, because it is something that everybody's talking about right now. And that the heart of it is that the dollar is down about 10% this year. Worst year for the dollar since 2017. It really, as you can see, started to weaken early in the year around the tariff announcements, and pretty much stayed weak and continued to weaken gradually through the rest of the year. On the flip side, we have seen enormous strength in precious metals, gold, silver, platinum, not so much in Bitcoin, which is interesting because people buy Bitcoin and some of them in the thesis that the dollar is weakening,
gold,
right? Digital gold, inflation. It turns out the place to be if that was your thesis is gold and silver and platinum this year in particular. You know, why is that happening? Well, look, you'll read a lot of stories about loss of trust in the U.S. dollar, loss of trust because of the tariffs and the U.S. as the sort of underpinning of the free trade system of the world, lots of trust in the Federal Reserve independence. Here's Goldman's Tony Pasquarello on gold trading note. Maybe the chart tells a story of fiscal dominance. Maybe it's gathering concerns around fiat currencies. Maybe it's simply a serious increase in central bank demand, which we have tracked. Central banks buying more gold, particularly in China. Just another sort of explanation here. Pictet Asset Management, a reminder that geopolitical and debasement worries have the same hedge, gold. Neuberger, investors effectively taking a massive and ever more expensive insurance policy on increasingly shaky financial and geopolitical systems. So there's a lot here. Geopolitics, the U.S. dollar could be the fiscal outlook and the spend of the U.S., which, you know, we're borrowing a lot. You haven't really seen those concerns in the bond market because there's been plenty of demand for bonds, but it is something we're going to continue to watch.
And well, with changes coming up at the Federal Reserve in the not too distant future.
Yes, I think I marked 2 key dates for this whole debasement trade, if you're a believer in this. So January 13th is going to be the December CPI report, because part of the idea is that things are still inflationary. Even if we've seen some tamer inflation reports than expected, I think that's still a big wild card of what happens to inflation. And then another one is the January 21st date, which is when the Supreme Court hears the oral arguments on Lisa Cook. Remember, this is the Fed governor that the president wants to fire, and there's a question of legality, whether there's cause and whether the president can, in fact, fire Lisa Cook. And some people think that is a key test, at least the Cook side is making the argument that that's a key test of Fed independence, whether the president will be able to do that. Not to mention, you know, his continued jawboning around lower interest rates and picking a Fed chair that wants lower interest rates. Although, you know, most presidents, every president gets to pick their Fed chair, and most of them want lower interest rates. This president is just more vocal about it.
And look, if the bond market doesn't give the Fed chair the freedom to cut rates because inflation ends up becoming an issue next year. Wow, NVIDIA back down 2%, not able to get and hold this momentum. Then obviously it doesn't matter who Trump picks as the Fed chair, because they're going to be listening to the bond market. But again, that idea around the debasement trade, silver and gold were the beneficiaries of that. Maybe not anymore. Gold now at its lowest point of the day. Silver still struggling, down 8.89. If silver loses more than 9%, you get that falling knife to start really falling again. It's got to go below 9% on the day. So basically below that 71.50 level. Gold down 4%. That's a big move on gold. How much market cap is that? That is, that is 1.2 trillion. Just disappearing on gold. Like, if silver wasn't the story of the past couple of days, we would, that'd be a 4%, 5% on gold is huge. And that's happening like it's no big deal. NVIDIA down 2.3, Tesla down 2.84, Palantir down 2.6. Seeing a lot of the growth stocks. Zeta down 3%, Robinhood down 1.2, and then Amazon down as well in the day. Where is that money going into? I mean, what do you guys think? Is that money going into cash? Because that would be my best guess right now. It's definitely not going into Bitcoin at the moment. It's not. It doesn't seem like it's going into the S&P. Money market funds, by the way, last week increased by 7.49 billion. So still $7.6 trillion on the sidelines. Last week, not a meaningful increase or decrease, but still, you have a lot of money that's still on the sidelines. I mean, maybe that money's just going to cash. It's going into protecting silver. I am really curious to see what happens with silver. I am like, either the party is over and there's a lot of money to be made on the downside, or this is just a small hiccup. And it is going to be fascinating to see this thing play out. I mean, it'd be pretty boring if it just stays flat for the next couple months, but that's also a possibility. Palantir right there, 184. NVIDIA, 186. June says, I've been tax loss harvesting to lower my gains and get ready to pay taxes for April. Yeah, I mean, I think that's the other thing that we all have to think about. A lot of people have really good gains this year. So there's definitely probably candidates in the portfolio, given every move you make is not perfect, to tax loss harvest. I tax loss harvested Misty about a month ago, back in November. So this one just not being a winner for me this year. But I'm sure there's plenty of names that people either bought too high or they just didn't end up working. I mean, put in the chat, what's something you're tax loss harvesting if you are harvesting anything? Because today would be the day. I mean, BM&R probably is a massive candidate for people to tax loss harvest, especially since most people got excited about it around 40, 50. But that probably is also something that's going on right now, which could be affecting sell side pressure. Webull, where's Webull? Yeah, $8. I mean, dude, if Robinhood's going to struggle next year, I don't know if Webull has a chance, to be honest. So a lot of the brokerages, they need to really innovate in a year if the trading volumes are not there. And I trust Robinhood will. I don't know if I trust Webull to do that. Nike, BM&R, Misty, Oscar, PayPal. That's fair. PayPal did give you a chance to buy this thing at 80 during the year. And at 80, it was, I mean, looked at the numbers, it wasn't a crazy, scary deal at $80. So at 59, it looks dirt cheap. The problem is their narrative just completely flipped to the downside. BM&R, Navitas. Dude, wasn't there a day Navitas was up like 40%? Yeah. Again, you just had some of these names that like they have their moment. They're their 15 minutes of fame. Yeah, Navitas, look at that, $17 back in October. I remember this. This was after hours. They announced something with NVIDIA, and this thing popped from freaking 7 on October 9th to 17 on October 15th. And this was after the October 10th meltdown. So everyone felt October 10th was a small little hiccup. The bull market's continuing. And Navitas was one of the poster childs of, oh, we're recovering because we still have these names that can make these massive moves. And unfortunately, then we had to deal with November, which took us back down pretty badly. Do you see consolidation of online brokerages in 2026? No, I don't think Robinhood's like going to buy Webull or anything. I don't think there's going to be massive consolidation. Yeah, I mean, eToro, Schwab, Fidelity, Hood, Webull, like, I don't think these guys are going to be merging together. We've already seen a ton of mergers over the past 10 years. I just think if the trading volumes aren't good next year because things are choppy or people just aren't excited to trade, because like it's really hard to be excited to trade if you can't spot a trend. Like when we had 6 months of green this year, starting from May, and not a single 1% move on the S&P 500 up or down for 6 months in a row. I mean, things became sustainable, things became trending, every dip got bought. And the brokerages massively benefit from that. If you don't have that next year, that's where I think the brokerages have a little bit more choppiness to deal with. But the best ones will innovate and grow, like a Robinhood. The worst ones, I don't know how they meaningfully deliver shareholder returns. I really don't. They're going to have to pull something special to figure it out. Google right there, 311. Google's down 1%. Bitcoin, 87.4. A little bit of a green candle on Bitcoin. And Microsoft at 487. Gold still down 4%. Silver still down 8.9%. So now Silver's basically at its bottom of day, right? Silver on the day. Yeah. Okay. So now this is where we got to watch silver. So we're tracking SLV, which is not the exact price of silver, but we'll use it as a proxy. It hit 65.11 at the absolute lows. It's at 65.24. This thing needs to go below 65 for this falling knife to meaningfully continue to fall. So you want to see below 65, right? If it reverses, which it is right now a little bit, you've got enough buyers coming. Look at the volume. 63 million shares have been traded on SLV. That is crazy. This thing does not get this type of volume. Because I mean, it's been flat for 14 years. Which is crazy. Ukraine headline. Ukraine tried to attack Putin residence in the Novgorod region. I'm probably saying that wrong. Is that real? Is that a legit headline? Ukraine tried to attack Putin's residence. Is that today? Ukraine? I mean, Zelensky was just with Trump talking about peace last night. That could definitely be contributing to some of the geopolitical volatility. Wow. Yeah. Is this Russian media though? I think this is a Russian media source. That's, let me see. If this is, then you have Russian media claiming that Ukraine tried to attack Putin's. Yes, this is Russia. So IFX and TASS are Russian news agencies. So this is coming from Russian state media. Wow. Russia says Russia will retaliate. Russia will change its Wow. What? Ukraine tries to attack Putin's residence. Russia will retaliate. Russia will change its negotiating position. IFX citing Lavrov. Both of these are Russian state media companies. Now, again, this could also just be propaganda if it's not real, if Putin's trying to negotiate, if he's trying to say, hey, look, I wanted to work with you guys, but look at what Zelensky did. He's trying to attack me at my house, which is very weird because this is literally what happened last night.
President, you said this morning you weren't a deadline guy. How long do you think it'll take to get this last little bit, as you say, finished? What are we talking about?
So if it went really well, maybe a few weeks. And if it went poorly, longer. And if it went really poorly, it's not going to happen. That would be a shame. There's that chance also. It's possible it doesn't happen. But, in a few weeks, we will know one way or the other, I think. But
I mean, again, Trump and Zelensky, they did an entire press conference last night. And the tone was, hey, we both want the war to end. And we are both ready to meaningfully negotiate. In a couple of weeks, we should be getting some momentum here. Whether it's fake or not, which, I mean, there's definitely a high probability it could be fake because it's Russian media. The point is, if Russia's now going to be claiming that this is their story and they go to Trump and they say, hey, Ukraine, Zelensky just tried to assassinate Putin last night. Now we don't feel we can comfortably negotiate. But that's an issue. That just whether it's fake or not, it complicates any level of peace that last night seemed to signal that we would get. It absolutely is political theater and propaganda if it is fake. But the problem is it still puts a wrench in the ability to actually negotiate meaningfully. Palantir right there down 2, NVIDIA still down 2, Tesla down 2. S&P is not really reacting to that like crazy. I mean, you're down 0.4 on the day. Silver, though, you got to move off that 65.11 low, 65.47 now. I mean, geopolitics has been good for silver and gold if there has been instability. So if that headline is confirmed as legit, maybe that affects that. Amazon still down 0.34% on the day as well. That's crazy, bro. That is actually crazy. They were literally just at the White House yesterday. All three of them had a phone call. They all three together were on the phone. And then after that phone call, they had a press conference. And now Russia's saying that Zelensky just tried to kill the guy. Again, it feels fake, but regardless if it's fake or not, this is the issue with trying to negotiate a meaningful deal. Rocket Lab still up 1.5. Rocket Lab holding up is also pretty damn impressive. Putin went long silver. Dude, Russia's not necessarily transparent about the assets that they own. I wonder how much they've loaded up on these commodities and if they've been benefiting from this. You got to imagine that they, at least in part, benefited from this commodities trade. It would be hard to imagine they didn't. Let's get a little bit more coverage right here on some more of this silver trade and see if it has more room to run right here. Silver now bouncing a little bit on the day.
Want lower interest rates. This president is just more vocal about it.
Much more vocal about it. Yeah. That said, he did never actually fire Powell as he threatened to do many, many times.
No, and said that he would leave, and said that this next Fed chair is going to be able to make the decision themselves. He would just like someone that wants lower rates.
Yeah. Where are we in terms as we end the year in terms of the deficit and just interest costs and things of that nature, back to sort of the concerns overall about debasement?
Yeah, actually, the deficit rises, as we can go into next year because of the tax legislation, the one big beautiful bill. It's expected to be stimulative for the overall economy because people are going to get tax breaks because of it. But we haven't really seen I mentioned a big move in the bond market because of it, because the auctions have been really focused around short-term debt, so haven't really increased the size of auctions in the longer term 10 and 30-year debt. Let's see what Treasury Secretary Bessent does on that. That's what could be sort of a cause for concern if they have to start sort of raising longer-term debt right now. But obviously the fiscal picture is not great.
No, I mean, and what about the divergence?
And see, that's the other issue. Trump loves to talk about the tariff revenue, which we've collected. I mean, I think it's closing in on like 200 billion for the year. But our deficits are going higher, which goes back to this debasement trade and why silver and gold continue to catch a bid. Now, the idea was Bitcoin would be the beneficiary of the debasement trade. That hasn't really happened this year. But if our deficits continue to grow next year, which it doesn't seem like they're not going to grow next year, I mean, I would take the under on the deficit actually contracting. Like maybe silver and gold or any other asset class that is counter-cyclical against the Dixie, which is down 10% on the year. And I mean, it's been stuck at 97 for the past couple months now. Maybe that becomes your hedge. What would be surprising next year is if the dollar strengthens. And I think there's a variety of scenarios where the dollar could strengthen. I don't know if the Trump administration, given the tariffs and trade negotiations, wants the dollar to strengthen in a meaningful way. But if that does strengthen, I think that puts a lot more pressure on Bitcoin, silver, gold, and the stock market. But it just seems unlikely that that's going to take place. Another update from that Russian news source: Russia will keep negotiating as per IFX. Yeah, I mean, that throws a wrench into a lot of the negotiations, a lot of the progress that you had last night. Robinhood right there, 117. Iran, 1.27. NVDA down 1.9. Kris, I see you in the chat. I'm going to send you a link. And if you want to hop on, we can get your thoughts on what's going on with silver as well. Let me send the link to you and you can hop on for like 10 minutes. Get your thoughts on what's going on with silver. Silver right here. Well, there you go, folks. Low of the day on silver, 9.21. There it is. Officially has broke the low of the day. So now we see if this falling knife continues to fall. Because that is the lowest level that we got this morning. Yeah, we should see a crack below 65 on SLV. Oh, there it is, 64.80. There it is. That's what we were looking for. That's what you got. All right, so now it gets exciting. Now we see who steps in. An hour into the market open, silver down 9%, has cracked officially the lows of the day. Now we see if the dip buyers actually have some guts. Do they actually believe in silver enough to buy? Because now you've got a lot of sell signals and algos that have just been triggered as it hits a new low. And quite frankly, you might have a lot of people saying, look, I bought this thing at 40. Do I really want to hold on and hope it goes back to 80? No. Okay, I'm up a lot. Let me take some profits. Let me just park it in cash or put it into a stock that I like that's super undervalued. So now it's time to really see if this thing gets ugly or not. Look at that, 64.60. Now it's going much lower. If we lose 64, that'd be Also very ugly. But amid silver's going to 200. Dude, people are defending silver with their life over the weekend. And you could tell people were long. I'm like, dude, it's freaking silver. Like, it's not even like, it's not like a stock where there's earnings and you believe in the founder or anything like that. It's silver. Like, you're so attached to this commodity. It's like, it's a commodity. There's so many other bigger macro issues. It's not like someone's spreading FUD about the stock that you think you fundamentally understand way better than someone else, and that person's just stupid. They don't get the story, yada yada. It's like, it's silver. It's like, this is not necessarily in the control of any single company that can put up a good quarter of earnings. But it's now become pretty emotional for a lot of people. 200 pesos. Yeah, maybe not $200. Okay, let's see what other headlines do we have. So silver now officially gets a low of day. Saw that Ukraine headline. Oh, we did have a TSMC headline this morning, which wasn't necessarily the most bullish, I would argue. Maybe that could have also been the reason some of the AI stocks were down. TSMC is going to be raising chip prices annually through 2029, which is bullish TSMC, maybe not the most bullish for all the other players in the chip space. TSM down about 0.5% on the day. This is going to be starting apparently on January 1st, 2026, according to Taiwan's Economic Daily News and Commercial Times. Maybe that's also why NVIDIA took a little bit of a hit this morning. Granted, NVIDIA can stomach having to pay a bit higher amount, where some of these other companies can't. Is due to the margin requirements changing. Yeah, so that changed on Friday. I don't know if CME issued a new update this morning, but if they did, and now they probably definitely are going to, given the asset is down 10%, and you've got people that bought it on Friday that are bag holding. 64.37. She is really taking a hit. Silver down 10% officially. 10.32% officially on the day. Gold at 4.9%. There is your 10% candle to the downside on silver. Christopher Patel, good morning.
What's up? A lot of people, they ask, like, Chris, you look really young. Yeah, except when I don't shave, all my silver actually starts to come out. So there it is.
Yeah, dude. I've got my silver coming out as well. So
I called you yesterday at 1:00. I was like, yo, I better tell Amit, like, this thing is going down, man. I've been researching this all weekend, and I was like, oh shit, like, I think we've got some problems here, and
okay, so what's the thesis? Why do you think silver is well, let me ask this question first. Is it a generational opportunity to go short? And then why do you think it is, if it is?
I wouldn't say generational opportunity to go short, but there's definitely some alpha to be had being a contrarian on the silver story right now. I mean, for this, you kind of have to go back to the reason why silver started to squeeze in the first place, right? And then you kind of can work your way backwards and then figure things out and say, okay, wait a second, like, did it really just do too much? I mean, one of the main reasons why silver has been doing so well is the Chinese economy. There's not a lot of places where they can park their money, right? If you think about it, real estate has been devastating for them. The stock market's been rough for them, right? So what have they been piling on to? They've been piling on to precious metals. You remember last year we spoke about them buying gold beans?
Yep.
I mean, when your average investor is out there trying to look for something that's going to, essentially get them out of a bad situation, they're going to go into all sorts of things. So one of the things is a lot of people, they see the price of gold and it's just so high. So they're like, oh, let me buy the poor man's version of gold, which is silver. And so some of the policy decisions that the government made not too long ago started to kind of like signal to the market that there might be, quote unquote, a silver shortage. And that made people go out there and just start buying. So while the intent of the government was to kind of keep prices somewhat stable, because one of the fascinating things about silver is that, unlike gold, the industrial use case for silver is very strong, right? But the thing is, like, you have to look at it a little bit further and saying, well, what is the primary places where silver, silver is actually utilized? And one of the places is actually solar. So about 25% of all industrial use of solar is actually coming from solar. So what happened was the Chinese control 80 to 85% of the solar PV market, and silver is a really big input cost to them. So while initially they were like, well, we want to kind of protect our supplies and make sure that, like, people can't weaponize our commodities, because the U.S. said silver is now a critical mineral. So the Chinese kind of responded and said, well, we're going to limit the amount of exports that are going out, where we're only going to have people who are licensed to do it. And that caused like this panic in the general markets, and everyone just started going out there and buying silver, and silver just skyrocketed, So this whole like idea that there's like silver demand gaps and there's not enough silver that's out there, I don't necessarily buy into that. I think that there's a lot of silver on the sidelines that's been accumulated. So even if there is a demand gap, it could be filled by refined inventories already. And if you look at the Chinese have one of the largest stockpiles of reserved refined silver. So, right now they have to kind of decide, like, do we let the retail investors keep buying silver in the open market and let the prices spike, and then all of a sudden the price of silver comes down and all these retail shareholders go, lose all their money? No, right? That's why this Friday was a really good trigger, because Friday they came in and told these guys from that ETF, like, hey, stop buying this ETF.
Yep.
They're trading at 60% over NAV. Like, it was insane. And then, so the securities regulator is working with them to kind of get that price back down. So how do you get them to come back down? Well, one of the ways, of course, is by stopping the flow of liquidity into this trade, which of course you saw this on Friday. So that was like signal number one. Signal number two is COMEX. They increased their margin requirements, not just for here, like right now, but they did it actually earlier in December. So this is the second time. So the first time you could have said, hey, wait a second, maybe this was a fluke. The second time is, hey, wait a second, Chicago is really trying not to let this thing go too out of hand. So
I didn't know they increased it in December originally.
Yeah, early December 12th. Look at it. Type in COMEX December 12th margin raise.
I mean, if that's the case, it feels eerily similar to 2011. Yeah, December 12th right here.
There you go. Show everyone so they can see. Yeah. So on the US side, the US side is also in this position where they don't want this thing to get out of hand. So this is the first time where the Chinese and the US are actually kind of like in the same zone of, hey, we need to get silver prices down, both because it's good industrial policy for the Chinese to protect their solar, and also not let the retail speculation get too out of hand. So they definitely do not want the price to go even higher. So if anything, they wanted to kind of slowly stable its way down. And the U.S., because of just how much money has been kind of piled into this paper version of everything, and the spread between the London Stock Exchange, London and Shanghai is so much that giant spread has caused another major problem, which is if you have prices in Shanghai trading at a significant premium to what you can get in London, India could just go to London, buy silver, start manufacturing solar, right? And what ends up happening is you're getting almost like a discount compared to if you were to produce it in China. So all of these things are kind of confluating together. And so the Chinese right now are looking to kind of protect their industry, protect their margins, protect their retailers. The US, with JP Morgan, supposedly, I can't really speak too much on that because a lot of this stuff is just hearsay, but JP Morgan has huge exposure to the silver market, because if you look at SLV, all of SLV's custody is custodied by JP Morgan, right? So look at the inflows that have been coming into this trade. You're telling me JP Morgan has somehow has this somewhere sitting in storage? No, they don't. So what did they do? They bought contracts. Well, the thing is, every time they buy these contracts, these things keep getting blown out. So it's kind of a weird
situation. People, when they're buying SLV, they're not actually buying silver bars. They're buying like an IOU essentially to get this.
Basically, yeah. I mean, so there's just been so much inflow into this thing that now it's JP Morgan, Jamie Dimon probably called up Chicago and said, "Yo, guys, listen." You're like really messing shit up right now. Yo, you all got to do something. And the Chinese are like the Chinese state regulators by doing the same thing. So in 2011, and Chinese have done this in the past as well, where in order to kind of stabilize prices, they've released the product into the market, but they've done it in a way where they've only let it out to industrial users, not to speculators, right? So what happens is the Chinese can do an auction and say, look, we've got this many metric tons of silver. We want to make sure that our solar guys are well supplied. We're going to do an auction, but the only people allowed to bid on this is going to be the what is it called? The industrial users. Now, what that does is that puts fear and panic into the retail shareholders' mind in China. So what happens? They're like, wait a second, I'm up 200, 300, 400% on all my silver. I better sell, So everyone trying to get out the door at the same time. And so now you've got this situation where your traditional gold buyers, like the people like in Hong Kong and Shanghai, they're all like, hey, listen, we see this going down. We're not trying to buy anymore. And the retailers are like, no, come on, you need to buy more. You need to buy more. And that's what you get, this rush through the exit door. And the thing is, the exit door is kind of like, there's not a lot of people standing there. And if anything, if you go to try to sell during a market sell-off like this, the only people that'll buy from you are people say, yeah, I'm going to take 20% off of the current spot price, right? I mean, look at the volatility. You're down 10% in a day. Imagine every asshole that bought 12 hours ago, huh?
Yeah, it's down now. So it's a new low for the day, 7.78. Everyone who bought 12 hours ago in the futures market last night or on Friday is getting decimated right now on something they thought would continue going higher. How would you steelman your case? How would you say this is not the top and that silver can easily reverse from these levels?
I would say the only way that it could reverse is if policy decisions that the Chinese have when it comes to their export controls, they really just come out strong and say like, hey, listen, like we are, I don't even know how to describe it, but basically we are very concerned with the US and the supply of silver in the future. And we are going to make sure we do everything to secure supplies now. If they say that, what happens is it creates like a scarcity mindset, right? In which case now you'll have a reacceleration of silver. But once again, that would go against their goal of not letting retail silver buyers over in China to go out there and start speculating. Brother, I'm telling you, I spent an entire weekend on Chinese TikTok.
I saw some of these headlines. Can you describe what you've seen on Chinese TikTok? Because it's kind of interesting.
Bro, people are going out there and just buying this shit. They're like, oh my God, I got rich over the last like 30 days. They're like, I bought this at this price. It's here. And so they're all, dude, just look it up. They're all going crazy over this thing. And what's funny is yesterday, it kind of like there's actually a couple of guys. There's this guy his name is, I don't know what it is in English, but in Mandarin, it's Dog Boss. I was like, bro, that's like Amit. He's like kind of like you, but he calls himself Dog Boss. I don't know what the exact translation is. I'm sure that it sounds cool in Chinese, but yeah. So his name is Dog Boss, and I was watching him, and I was like, bro, this is like Amit from China. And Dog Boss was saying like, hey, don't go out there and buy silver anymore. Like it's too risky. So
I see the screenshot you posted. So this is Douyin, which is the TikTok, the Chinese TikTok, and people can see right there the caption is, who gets it? I suddenly want to sell all my silver. Friends who are willing to buy it, please raise your hands. I've been researching silver investment lately, but I realize I don't know anything about it. On the contrary, I'm thinking that investing should be left to professionals. After all, leaving professional matters to professionals can save me a lot of trouble. That's what he wrote in Chinese. And then here's a video of all the silver bars that he's selling.
Yeah. So that's the other thing too. There's been a lot of like fake silver that's been going around as well, right? And fake gold. Like people are like, okay, there was another video of this lady who was like super pissed off because she bought gold on JD.com. It's like going and buying. I'm telling you, she was hilarious. So she went out there, went online and bought like gold, and then she'd like, they opened it and there's like, this is not actual gold. And she's all pissed off and shit. And so there's also a lot of counterfeiters that are coming out there and saying, hey, I got this gold for you. I got this silver for you. And so people are like, wait a second, is this really gold? Is this really silver now? So there's kind of this weird dynamic that's happening over in China right now. And I don't know what's going to happen, but just purely from a technical standpoint, let's kind of ignore the fundamental case to bring silver down. Look at SLV and look at like, go down to the thing and go to max and look at the RSI max on this thing, on like just how much it's overbought.
Oh my goodness. Wow.
84. So that means a lot of people are probably going to be in profit taking zone with this because their entries have been really, really good. Now the question is, where does this kind of come down and where does this end up? And I mean, I've been looking at some of the silver, like pure plays and silver miners to see where they are. But essentially from a technical perspective, silver is very, very overbought, very overbought, so anything like a reversal is going to gap down.
So what are the puts? Like 6 months out, a year out?
I did a year out, but I didn't short silver. I shorted some silver miners that have been up 300, 400%. And the reason why I did that is because a couple of things. Number one is some of them are not pure play silver companies, but they got a premium like they were pure play silver. So literally some of them were trading at like $5 a share. Now they're trading at like 20. Right. So it's like a 300% increase on the thing. So, and then you look at the EBITDA. So the other thing is they can't just ramp up their silver. It doesn't work that way. You can't just say, you know what, my production, let's double my production. So the amount of forward sales is still going to be, like limited by the amount of volume that they can output. They can't ramp up nearly as quickly. So yes, they could theoretically say, oh, well, our entry cost is 20, our full in ASIC price is 20, and we're going to sell at, 70, 80. The problem is if the price of silver on the spot market goes down, all of a sudden now the quote unquote, the future projected value of the company is no longer valid for the stock price that it's trading at. So then what happens is the stock comes out. And this was like, once again, this is exactly what happened in 2011. So they will benefit, especially if they're sell some future contracts at a high price right now. But the problem is a lot of them don't do that. A lot of them don't hedge their production.
So more broadly speaking, you think silver is a short right now. You think it can come down. NVIDIA losing 190, S&P not really giving you that Santa rally. I mean, we got 3 days left of the year. Do we think we get to 7,000 by end of year? Or are you still bullish on these AI stocks leading the way? Or do you think silver's foretelling something greater over the next
No, I think it's fine. I think the AI trade is definitely not over. If you look at NVIDIA's forward EBITDA, it's still very strong. You look at all of these companies, the AI trade is not there. It's just sentiment can change. The market has a way of just changing a little bit. And all of a sudden everyone is just like, oh my God, I need to get out. I think the first half, there is something to be said about possibly the get out in May trade happening, where the first
that didn't happen this year. Sell in May, go away. That did not happen this year.
Yeah, so we might actually end up seeing something of that, nature happen. And so, we'll be very curious to see what a lot of the super investors do next quarter. But yeah, I mean, the AI trade is fine, in my opinion. Anyway, I think right now it's just people got really, really excited about the metals as an inflation hedge. And so that right there is a problem. So I do think that when markets, it goes right back to investing 101. When something is overbought, you typically want to be a little bit on the, the negative side of that and everything gets sold off, if there's real value there, you kind of want to buy into the weakness. So like right now is a clear like, hey, wait a second, we are way overbought with silver. So the chances of it getting corrected to the downside is pretty strong. You know.
You think S&P 8,000 next year, 7,500? Do you have a target on where you think this can actually go?
I have no clue, man. With the Trump administration, you really don't know, because like any time policy decisions can come out, and you know, like there's the administration is very, very unpredictable. I do think that there is one thing that the market may be missing in the first quarter of 2026, and that is that there's probably going to be a huge stimulus that's going to get injected into the economy, primarily from tax refunds, because I'm not sure if people in the chat all know about this, but when legislation comes out regarding changes in tax policy, what tends to happen is your withholdings adjust to that. And then you have like a nice period of time where that adjustment, where the government does not necessarily take in as much money, right? So you had all of these tax cuts and everything else get pushed into 2026. But the thing is, people's withholdings on their paychecks did not get changed. So what happens is all the people who have all this additional taxes withheld, because the way that the one big beautiful bill thing works is that it's retroactive to 2025. So everyone is going to see much higher tax refunds next quarter, right? So when everyone files their tax returns, they're going to basically all the money that they've paid on their tips, all the money that they've paid on their overtime, all the money that they've paid on interest on their car loans, all of those things are going to be tax deductible, in which case now it just means that everyone's going to get a bigger refund. From what I saw, the average American is probably going to get between $1,000 to $2,000 in additional refunds, which is pretty significant. So if you look at the total amount of stimulus that is possibly going to be coming out, I think the estimate was usually about $300 to $400 billion worth, or I think it was like 270 to 370 or 400 billion dollars gets returned to the public. Next year, it's probably going to be closer to between 400 and 500 billion dollars is going to be returned to the public. So that just means that there's more people are going to have more money in the first and second quarter to spend. And if that's the case, then, you know, that just means that there's like a nice little economic shot to the arm.
Okay, last question for you, Kris, and I'll put Chris's Twitter in the chat. You guys can follow him there. Give me 2 to 3 picks for 2026 that you're really looking at and you think people should pay attention to.
I think Amazon is a nice coiled snake, very similar to what we saw with Google last year, where everyone kind of just like left Google for dead, and then Google came out with Gemini and some of their new models, and everything was just, oh my God, wait a second, these guys are actually doing really good. Amazon has a couple of catalysts that are coming out next year. Especially their Trainium 3 line that could possibly reaccelerate AWS growth. If that happens, and the market's kind of going to reevaluate what they're willing to pay for Amazon. I mean, and Amazon's like, if you remember Bezos's mantra when it comes to Amazon is always, your margin is my opportunity. So, you know, Amazon's not the type of company that's just like, yeah, you know what, we're going to cede all of this margin to NVIDIA forever. You know, they're going to try to do what they can. And so I think the hyperscalers are probably where you want to look. I think I would not necessarily buy Google, because I think Google's valuation has kind of gone a little bit to the upside. And so it's more fairly valued right now rather than undervalued.
And you were buying Google at 140.
Say that again?
You were buying Google at 140.
Yeah. I think right now, Meta is also going to do well over the next couple of years, because they have one of the largest distribution points, you know, like channels among all the hyperscalers, because they just have so many users that use their family of apps. And the thing is, with advertising, it's immediate monetization, especially if you can use it to generate, you know, a lot more customer specific advertising and targeting. And not everyone can do that, because the amount of capital required to invest into the AI to enable all this stuff may or may not be there. So the thing is, Meta is in a position to generate significant amount of cash. and if there's any indication that they're, you know, slowing down on their capex and they're going into more of a what is it called, a year of efficiency thing. Remember in 2022 we had that year of efficiency thing. So any indication that we're going into year of efficiency, I think the multiple re-rates to higher, because people are going to say, oh, wait a second, they're not just going to burn cash, they're actually going to, you know, maintain their pristine balance sheet. They're going to reinvest in the business, but they're not going to go over crazy with it. They're going to buy back a crap ton of shares, in which case now Meta kind of starts to recover, like we saw with the whole announcement with Reality Labs. So clear as day, you can see that Zuck is not an ideologue where he will not pivot away from an idea. Like if it means that to protect Meta and the shareholders, including himself, because he's the largest shareholder, he's going to pivot, and he's going to pivot to the upside for shareholders. So in terms of like shareholder alignment, there's no one more aligned to his company's share price than Zuck.
So Meta and Amazon, those are the two ones for next year.
Yeah, I think those two. I think NVIDIA has a pretty good shot of doing well as well, only because the Blackwell ramp up is going to be pretty significant. The only thing I worry about, to be fair, is probably like mid-year to mid to late in the year. If there's any indication that growth is going to be slowing down materially for 2027, then you know, the market may front run it and say, wait a second, like why we're not going to pay this extended forward PE multiple, not EV to EBITDA multiple, if there's no guarantee that they're going to be able to grow their top line by, you know, a crazy amount the year after. 50%. And so most of it's going to end up going from, so NVIDIA is going to probably get re-rated from growth to value, and that those re-ratings are always really, really painful to watch. I mean, you're seeing it live with Adobe, you're seeing it live with Salesforce, where they went from a steady 20% year-over-year growth rate to like now they're growing at 10%, but look at the stock price, it's halved, you know.
Unless NVIDIA can actually keep up the expectations for the next 4 years, which is estimated.
Well, I would say that's going to be very hard to keep. Dude, they're growing at 60% year over year right now.
No.
Do you know how much money? Like, I don't think there's enough money in the world to support that kind of growth rate indefinitely. I'm sorry, guys. It's just the truth, you know? So at some point, your top line is going to slow down. They're going to still be generating massive amounts of free cash flow. The one thing that we are seeing from Jensen, which is actually smart, is to try to break NVIDIA away from being a hostage to the commodity cycle. I mean, not commodity cycle, the cyclicality of the semiconductor business, you know, to actually become a lot more of a services oriented business, because this way that's always been the challenge with anyone who does hardware. I mean, I see this with medical device manufacturers. So back in the day, if you bought a CT machine, you just bought the CT machine. It came with all the software. Everything was good, whatever, right? And so you would have these periods where there was just hospitals would go out there and there's a new generation of technology. Everyone would buy CT machines. And so your earnings were just amazing. So everything was just up and to the right. And then the next 2-3 years, everyone kind of said, we've got the latest technology. We don't need to buy a lot more stuff. What happens? All of a sudden now sales drop and the company's like, looks like it's doing very poorly. So what GE adopted was a different strategy where they sold the machines at a discount. So they beat out their competitors. And what they would do is just mark up the services contracts. And so what happens now is that if you buy a machine from GE, you know, you're basically going to have this nice long tail of reoccurring revenue, right? They did that with their software too. So instead of it being buy the hardware one time and you get this boost artificial of revenue, now you've got this string of revenue that's just, you know, constant up and to the right. And so this way, what happens is from an investing standpoint, you don't have these periods of multiple expansion and multiple contraction. And a lot of companies are moving to that. So it's even the car manufacturers, as much as I hate that, that's what they're doing too. Like, I think BMW tried to do like subscription based, heated seats or some shit like that. Remember that?
Yeah, that didn't work. But like, it makes sense because at the end of the day, those recurring revenues the street loves. And,
Yeah.
and you kind of need it if you're going to grow at the level that NVIDIA's continuing to grow.
I mean, your valuation is stronger because people are not wondering what you're doing quarter over quarter or year over year. You're like, oh yeah, this like the market seems to reward companies that can grow 15% year over year indefinitely rather than a company that can do 50% one year, 10% another year, then be down like 5% the year after that. And so just from a stability standpoint, everyone's kind of trying to figure out how to make sure that their earnings are always like this nice steady eddy going up and to the right,
All right, Kris, silver, low of the day. Thank you for being on, and we will keep an eye on how
Let's see what happens, man. All right, have a good one.
Have a good one. Thank you. Lows of the day on Mr. Silver, 10% down. If you went short in the morning, you are up. If you bought on Friday, you are not up. By the way, we have this headline here. Anthony Joshua, the boxing guy, he survived a car crash in Nigeria that left 2 people dead. I know it's super random, but that is a crazy headline. So he is alive. He was not driving in this car. I don't know why he was in Nigeria. Again, he just fought Jake Paul a week ago, right? And he's alive. That's kind of crazy, but he was just in a car crash. Zelensky just responded to the Russia claim. Zelensky says this is lies and this is not true. So you got Zelensky coming out saying this is not true. The Russian foreign minister is now backing up those statements. Oh, he's British Nigerian. Okay, so then he basically went to visit family, most likely, after the fight. But he was in that car crash. Russian foreign minister said Ukraine tried to attack the residents. Again, Ukrainian Zelensky just came out. President Zelensky came out and said this is lies and this is not true. I think this is going to complicate a lot of the negotiations that happened last night. But there you go. That is the headline from Ukraine. I mean, it felt fake, dude. Like, you just got off a 3-way negotiating call last night and the morning after Ukraine tries to kill Putin. It's like, it's possible, but it just feels unlikely. So now we're going to have to see how Trump navigates this problem as well. Silver, again, the story of the day, continues to get wrecked. Gold is still down 5% as well. Palladium and platinum both down double digits. SLV 9.17% down. NVIDIA not being able to get any level of momentum. That one's down 2% as well. Meta's down 1%. VG holding up at this $7 range. BMNR, it was up 4%. Now it's barely up 0.5%. Zeta's down 5%. Hood's down 1%. Pretty much everything rooted in growth is getting hit. SoFi back below 27. Oklo down 3.5%. I mean, whatever little bit of rally we got 20 minutes ago, all the data center stocks were green. Now they're all red. CoreWeave, Nebius, Iren, all of them flipping to the downside. Micron's up a little bit. I do think Micron's cheap. It's just, again, it's had a massive run. So you've got to be super confident that the memory cycle is going to be in their favor. And that they're putting up the EPS growth and the guidance to make you think it's not going to slow down. But it is up a lot for the year. Microsoft right there as well. Down 0.2% on the day. I don't know, guys. We got 3 days left for Santa to come to town. He's not here today, that's for sure. And again, the sort of logical reason we don't have a Santa rally is that the Santa rally is based on September and October being ugly months for the stock market, which historically they are. They're just not good months. This time they were great months. Although we had the October hiccup, we ended up 2% on both of those months. There's 2% back-to-back months in months where historically you have a negative 1% aggregate return. And so December is really a recovery from September and October. But in this case, September, October were great, which is why the S&P is very close to all-time highs. All-time highs is 690. We're at 687 and we're complaining. But realistically, we should not be complaining. But it's just not the type of rally that I think a lot of us were expecting could happen. And I think that's the broader issue. Here's the heat map as well. Pretty much a mixed bag, but tech definitely going right on there. November was ugly, but November ended green for the S&P. That's the crazy thing. As ugly as November was, it was a green month. And that's why, like, it's hard to complain that we're not getting the Santa rally when the S&P all-time high is 690, we're at 687, and we're acting like we haven't rallied. It's like, no, we have. And November, as ugly as it was for high beta names, ended green. I mean, we got a relatively decent recovery going into Thanksgiving. But I think all of us just, really thought 7,000 was on the way. And it might not happen. We're just sad we left cookies and milk and no Santa. I guess he doesn't like our milk and cookies. I guess he just doesn't like the milk and cookies that we left out. It is a Monday morning as well. That is true. Although you are getting real volume coming. Look, I mean, S&P 15 million shares already. On Friday, this was like 3 million shares that were traded. So you've got at least 5x the volume on the NVDA 50 million shares. That's way more normal than what we saw on Friday. So you have real volume coming in. It's not like people aren't trading. They are just not that excited. We left cookies and milk and we got Steve, not Santa. That's also true. I forgot. I have lunch with Steve today. I'll be meeting Steve in a couple hours, and I'll be trying out medium rare at a new restaurant, at a new steakhouse. So it'll be my second time doing medium rare at a good spot. So I'll let you guys know if I'm fully converted, or I'll let you know if I'm fully converted to a medium rare guy now. What else? What else do we have? Medium rare boys growing up. We got to see, dude. I need a couple of really good medium rares to be like, I'm officially converted. But at least I'm not scared to eat medium rare anymore. Like before I used to be scared. Now I'm just like, I will eat it without having so much fear of what I'm eating. German Foreign Office, we are following with concerns of China's military exercises in the Taiwan Strait, especially that they were announced at such short notice. We talked about this last night, that China is holding new military actions on the Taiwan Strait, which are not good. So you've got Germany now responding. Trump has not, or the White House has not put out a statement at all about what's going on with Taiwan. Oh, the White House did just respond to the Ukraine stuff. President Trump has concluded a positive call with President Putin concerning Ukraine. That was literally 25 minutes ago. I'm seeing that headline. So maybe those tensions don't flare up if Trump was able to. Oh, no, that was 5 minutes ago. That wasn't 25 minutes. That was 5 minutes ago. That just came out. Okay, so the White House calming down some of the fears around what happened with Ukraine. President Trump has concluded a positive call with President. Now, White House might be doing some damage control as well, because they want to protect their negotiations that they had literally last night. So they might be not necessarily sharing the entire story. Or maybe Trump listened to what Putin said and said, okay, I'm going to make the deal even worse for Ukraine, given they just tried to assassinate you, even if Putin's lying. But maybe that was the positivity of the call that Trump just got done with. Or maybe he said, cut the crap, Vladimir. He might have said that as well. So we need more details. We need to see how Trump handled this situation. And we'll probably get more details later today. 687 on the S&P, down 0.3%. Why are you scared about medium rare? I just didn't think it was cooked. Like, it felt like I was eating something that wasn't cooked. But after I just ripped the Band-Aid off, I was like, no, this is cooked. It's just not exactly the type of cooked I'm used to. So I feel like you kind of just got to jump in sometimes and take a bite. All right, I think that's it, guys. I don't think we're getting anything too crazy here. I mean, it's a flat day to say the least. Silver is getting decimated. Either dip buyers come in And this is the bottom, or this thing has a lot more room to fall. Mercado's up a little bit. Peloton's up a little bit. Oxy's up a little bit. SoFi cannot catch a bid to stay above 27. Rocket Lab holding 70 has got to be incredible price action given the run that it's had. And so ASTS took a nasty hit last week. Rocket Lab has relatively stayed strong, even though it's down from 77. All the data center stocks are down. Grab is flat on the day. MicroStrategy is down. Opendoor down 2.4. That's down below 6. You're seeing some pain on Opendoor. Verizon's up a little bit. Netflix still flat. And then Hood down about 0.5% on the day as well. Was the market red last time you ate medium rare? No, I ate medium rare like the day before Thanksgiving when the market was starting to recover. So maybe eating medium rare today will be a good thing. Did you vote for BMNR? No, I haven't voted yet. I know that I've been getting these emails though, but I've been so lazy about like actually doing the vote. I also don't think my vote is really going to matter here. I mean, like at the end of the day, the main vote that I'm seeing on the proxy is, do you give them more permission to dilute? And to me, I'm like, yeah. I mean, like that's what they're inevitably going to do. That's what they have to do to get more money to buy ETH. Now, the staking is a good way to hedge back against a little bit of the share dilutions. But realistically, I don't think the staking matters. I don't think the dilution matters. I don't think the MNAV matters. The only thing that matters for BMNR and MicroStrategy is the price of Ethereum and Bitcoin. These are not companies like Hood and Coinbase where they have something else besides the price of those assets, which Coinbase is a lot more tied to the price of the asset. Hood is not. But these are leveraged digital asset treasuries that need the underlying asset to go up. So realistically, I think this is just more of a waiting game on Ethereum and Bitcoin, no matter how much they dilute or try to raise more money. Yeah, there's also a vote for PSUs for Tom Lee. I mean, look, I think that's a good idea because he should be motivated with performance stock options. But realistically, his performance is irrelevant outside of Ethereum. Like, there's nothing he can do. It's not like he's Anthony Noto that can actually drive the company forward and get the stock to 45 and make $500 million because he increased the member growth by 40%. It's like Tom can't do anything other than hopefully like have a lot of ETH ready for when ETH runs. And he already has a lot of ETH. They've got almost 4% of the entire network. So it's not like he hasn't done his job if his job is to buy ETH. Maybe he bought it a little bit too early, but like realistically, this is based on ETH. Is it like what potential performance could you bring to the table outside of ETH going up? So I think that's the broader question that we're gonna have to see for BMNR. He can stop making these crazy price predictions. Well, one would argue that's what gets people to be excited about it. But I agree with that, dude. As much as I love Tom, he's calling for 9,000 by early next year. I'm like, I don't see that happening. If it does, I'd be very happy. But I think whenever you put a price target with a time frame, it's just a little tough to live up to it. All right, folks. I think that's it. We'll do word of the day, and then we will we'll be out of here. We're back on the market close. Nothing too crazy on the close today. We don't have any earnings, so I don't think we're gonna see anything crazy. I think a lot of this comes down to if we don't get a Santa Claus rally, we just have to be okay with the fact that this was a great year. The real rally, realistically, was buying in April and May. If you bought on Liberation Day or anywhere near that time frame, you've done well, regardless of if the S&P 500 hits 7,000 by the end of the year. And for the stocks that are down, that are losers for the year, you got to ask yourself and reevaluate: are there, real arguments to stay bullish? Which, if there are, like a BMNR has been down for the past couple of months. Amazon has done nothing for the past couple of years, quite frankly. These are names that I think have really strong fundamental narratives to them. And the question simply becomes: are you long on the thesis, even if you don't see a major rally going into the end of the year? Then there's other names that have done great, like Google, where if Google hits 320 or if Google goes back to 290 by end of year, who cares if you bought it at 140? If you bought it at 200. So although I want to see a rally as well, and we are very close to that 7,000 level, if we don't see it, it is what it is. Still been a relatively strong year for everybody. All right, cool. Let's end it out with word of the day. And we'll be done here. Silver, I think, is the main thing that we have to look at. I'm not going to go on a rant. I had 4 rants yesterday. If you look at the Market Future show, 4 hours of freaking ranting, which maybe helped Bitcoin go up, but cannot go on a rant today. Silver's still down 9.5%. 9.5% on silver. Okay, so word of the day. Fortuity. Fortuity. The quality of happening by chance, especially in a way that brings about positive or beneficial outcome. What looked like a setback at first turned out to be pure fortuity, opening the door to an opportunity I wouldn't have found otherwise. A nice reminder that sometimes randomness isn't noise, it's an opportunity in disguise. Okay, I think it's a timely word. The quality of happening by chance, especially in a way that brings about a positive or beneficial outcome. I mean, this was basically April. As random as the decline seemed, it was the greatest opportunity this year. And it pretty much made the year for the majority of people. So that's what we got. Word of the day. All right, we are done. I'll be back on the close. I will make sure to take a picture of this medium rare steak. Maybe eating it helps us get this Santa Claus rally. And cue the rant about ranting. Dude, I stayed on for 4 hours last night. A lot of you guys called me out because I was tweeting at 2 a.m. I left at 11, said I was going to sleep, stayed up at 2:30. I was tweeting about silver at 2:30. And I woke up early today, and we did the market open. Because I love this. I love doing this. And I'm sorry I missed Friday. There's no way I was going to make Friday the day after Christmas, but I love doing this. We're back. We're going to be live throughout the entire week. We will have a New Year's stream on New Year's Eve with Steve and a bunch of the other guys. We'll have our 2026 predictions. January 1st, the market is closed, but we'll be back on Friday to start off 2026, which is crazy that Friday we start off the new year, but that is happening. And then we'll be doing a giveaway tomorrow. So we're not doing Technical Tuesday tomorrow. Again, we did a lot of technicals last week, and that was kind of like our end of the year Technical Tuesday. Kind of doesn't make sense to look at technicals 2 days before we get into the new year, because just a lot of these charts don't matter until we get into the new year. But we will do a giveaway tomorrow, and that'll be pretty much it for the week. That's what we got. All right. Thank you, everybody. Appreciate it. We'll keep an eye on silver. We'll see what happens throughout the end of the day. Silver actually getting a little bit of a bounce right there from 63.90 to 65. So either this is potentially the bottom or this is a head fake. But we're going to see throughout the day how this one ends up going. Thank you, everybody. Appreciate it. We'll see you guys on the market close. Bye, everybody. Have a good one.